Hello, everyone. Welcome to Monday, and welcome to a topic that even if you end up watching it with us here, you're probably not super excited to have to do it, but we have to do it. We have to do it. And Ron and I have done this a couple of years. I think we did your podcast 2 years ago and on audio, and then we did a video last year, and then Marissa was in on one. So we've gone through this a few times. But Ron always puts out great articles about taxes right at this point in the year. And right now, I don't know if it's the same with all of you guys. It probably is. W2 or what you need to work with your taxes are all coming in right now. And I've actually told people, I don't know where he stands with this. I'm going to ask him in just a second when I introduce him. But I always say wait till the early part of February. Don't file too early because some roll in, and you want to make sure you don't miss anything, guys. But we are going to talk about taxes here today. Ron has written a couple articles, and we're going to follow 9 points of one of his articles because there are things we've talked about before, but there's some changes and there's some differences, and it's always a good refresher. I will not be looking at the chat, and but I will come back to it at the end for all questions, answers, and all that stuff, because this will drop tomorrow on the Para channel. So when we're done here today, this will go to private, and then we're going to do a Q&A after for if you guys, as long as you guys have some questions. And that part I'll bring back as soon as the Para goes public. If that didn't make sense, I will make sense of it later. But but just know, please put your comments in. We're not ignoring you. We're just going to have a conversation on this, and then we'll move over to the chat. Okay. So Ron, thank you for joining me to do this kind of a last minute. I feel like we put it together like this way every year.
Yeah, we do. It's kind of like, oh, hey, you want to get on? All right, let's go.
Right. It's that time again. It's like, oh. But how you doing? How's your New
I'm
Year?
doing well, thanks.
Yeah.
Yep.
No gig work so far this new year, or?
I've done a little bit. I had a lot of personal things going on and everything like that, so haven't spent nearly as much time lately out on deliveries as I'd like to. But
This is that time of year. I always, I think all of us say take some time off when you can anyway.
well, there's that, and I think that's one of the things I like about being self-employed. It's like, something comes up, and if you've kind of taken care of yourself financially and things like that, when you need to take the time off, you can take it off. You don't have to ask somebody permission. I love that.
Yeah.
You
No, I
don't
mean
have
that's
to request
huge.
vacation days or any of that stuff.
Or and even worse, get denied vacation days.
Yeah.
I mean, especially I'm going to say from the service industry standpoint, and I went to the top. I was an owner, I was a manager, GM, but I've been bartender, all of that. And even when I think I can get something, it really is a blow when you really have this opportunity to go do a vacation and you can't go do it, and you understand why. You're a bartender, and I just gave it to him because it's like an off season for your bar or something. It's just a bummer, man. You just feel like, man, like I busted my tail all year.
Yeah.
And I can't just.
One thing that helps is that I've done something that, I call it giving myself paid time off. And what I mean by that is, every week I set aside money for taxes, which we'll get talking about here, and for car expenses. And I do that on a per mile basis so that I've got money built up. So if my car needs anything, I'm all ready to take care of it. And then the third thing is for paid time off. And usually I'll put about $50 a week aside for that. And then if I'm going to take a vacation or I get sick, something like that, the money that I need to go out delivering or go out making money, I've got that money there, and I can just pull that out of that savings or something. So that helps an awful lot. That was a godsend when COVID came around and everything. So anyway, that's getting off topic, but
no, well, I mean,
but the saving for taxes isn't.
Man, there's no gig economy or tax topic where I feel like you can't get off topic real quick.
Oh, no kidding.
It's so hard because it's almost like getting off topic often has to be included.
Yeah.
It kind of helps bring it around. But so which Which of the articles are we primarily working off here? Are you kind of are you gonna try and digest the Uber Eats and the DoorDash one together?
Yeah, and generally I wrote those.
If when we get to those points, can you say if there's anything specific that was to one or the other?
Yeah, and I'll tell you what I'll do. I'll tell you is if you go to entrecourier.com and in the menu there's one for tax guide, and that is it's more or less it's a catch-all. It's about gig work in general. And then I wrote a couple of them that are pretty close to the same article, but I wrote them focused on DoorDash or focused on Uber Eats, mostly because a lot of times people are looking for that. They're not going to find the generalized one as easily, but if I've got it where it's written specifically about DoorDash, then it can get to them that way. So if you just go to entrecourier.com and then click on tax guide, it will take you to the first one. It'll take you to kind of the catch-all article, which is kind of the main points that we're talking about here.
Mm-hmm.
But the other thing that I wanted to do that was different than a lot of things that I'm seeing out there is I see a lot of articles about DoorDash taxes or Uber Eats or any of those out there and
Every year.
cover it all in one big article. And the problem with that is, okay, you understand you can write off miles, but somebody has a question, well, what miles can I write off, or how do I know how many miles I have? Different things like that. Sometimes those one article fits all type things don't cover all
Yes.
that. So I put it
It,
together as a series where there's like, go into a lot more depth about all the different parts about it.
well, I
And
think specifically too, it's
you
good
can
that
see a
you're
list
hitting
of
on
those.
DoorDash and Uber Eats
Right.
because that's going to be a lot of the people who really need some help
Yeah,
in
absolutely.
this that will watch this. Um, but yeah, I mean, I guess I'm gonna type a banner, I think, for each of the 9 topics, so I'll put it at the bottom
Okay.
as we move through so that, at least it chapters it out that way a little bit, so you and I'll take it away too because it takes away from the screen, guys, but that way you'll kinda be able to scroll through and see what different topics are being covered here, but we will just move through them one at a time.
That'll work.
Ron and I are not certified. However, I do want to make one comment, and I'm pretty sure you agree with me on this, Ron. There's a lot of people who put out tax stuff this time of year, both in print and on YouTube, who
Yeah,
I don't want to get into starting drama, and I'm not going to name any name because I don't even think I have a specific one, but too many. And a lot of times they try, maybe they read an article and I see they're trying, but they really aren't passing along like good information.
sure.
So what you'll hear here, if it's questionable, Ron or I will say it's questionable, or you'll know it's a straight opinion, this one might be wrong, but then you'll know the parts that are correct too, and that are everything can be fact based unless we say it's opinion,
Sure.
because it's all documented. So
And that's where taxes are such a funny thing because there's there's some there's some bad stuff out there or some incomplete stuff out there. And I watched one just the other day, and he did a good job walking through some of the basics as far as how some of it works, but then totally skipped out self-employment tax, which for most gig workers is by far the largest part of their tax bill, and didn't even touch on that. And it's kind of like, you know I don't know. Sometimes you got to be careful. The flip side of it is, just like Steve said, neither one of us are, tax professionals. Um, I don't know that I would even call myself a tax expert. But the thing about taxes is, I don't think that they're as mysterious as a lot of times we make them out to be. The IRS is very clear in a lot of different things, and it's just a matter of digging into things here and there. But that's why I boiled it down to 9 different points. Just
yeah.
that, if you understand those things, you get a pretty good idea, I think, of how it works when you're doing taxes. And so, and then from there, sometimes it's the little details that throw some people off, or or where some of the bad information is and things like that. And we can talk a little bit about those details as we get to each one, but you don't want to go too long, or else we're doing one of those 30-day live things,
Yeah.
all you know
Right. Yeah, the one from
24/7
last year,
talking taxes.
the one from last year was 2 hours. And I think that this would be a good one to be kept at an hour. And then,
Yeah.
afterwards we can take a look at some Q&A as well. But um let's just jump in here. Start, because I don't even think it needs a preference. The one thing I will add, though, about what Ron was saying, again, saying what I said about not being experts, maybe that's so, but I think you and I have spent a lot more time than most looking into it, and I
Sure.
know we've been doing this a lot longer than most, because you and I were independent contractors before any gig existed. Gig app.
Right.
No, all these gig apps, you and I we understood, and we had both W-2 and independent contractorship jobs in the traditional independent contractorship
Sure.
world. So we might not be experts, and yes, we just said that, but at the same time, I think we've been through it a lot more than most. So obviously, you get a lot of advice when you go through this a bunch of times.
Yeah.
I learn every year.
Yeah.
So um, well, let's start with topic one. You're being taxed as a small business owner.
Yeah. That's, I think, the first thing that people need to understand, because one of the things, especially right now, as it's 1099 time, all of the Facebook groups are like, "Have you got your 1099 yet? How do I get my 1099?" But a lot of people look at those as though they're like a W-2, and it's a very, very different thing. And so we need to kind of understand that you're not filing, you're having to do some business taxes here to help determine what your personal income is. And so they call it a pass through taxation. And what that means is your 1099 is showing what your business made. When you're an independent contractor, you're not an employee. And I know most of you know that and understand that very well. But just for those in the back, or those that are brand new to this, you're not delivering for DoorDash as an employee, and your 1099 is not the same thing as a W-2. What your 1099 is a statement of what your business made or received from DoorDash or from Uber Eats or for some of these others. And so it's the first thing to remember is that you're figuring out your business's income, and then the profit from your business then moves on to be part of your personal income. And so there's, a little bit of a nuance. It's, to call it business taxes isn't as bad as it seems. And that'll get us to the second point with that. But
But real quick to interject too, when he
sure.
says that, guys, don't immediately tune out and say, "I'm not a business, though. I just work 2 apps." You are a business. That's kind of where we at. So if you did miss
Sure.
that part, I just want to clarify for some that when he's saying business, he's meaning even if you're on one app, just you.
Right. Right. Yeah. You could be working one app, you could be working a dozen apps, but, um, and sometimes it doesn't feel like a business. I know a lot of people that will argue and say, "Oh yeah, but I don't have control," things like that. But according to the IRS, you are a business,
Hmm.
and you kind of need to think of it that way when you get into your taxes.
Yeah, I mean, you are a business, and that's and you need and I know it's all fun and flexibility until it's tax time, guys. Because I mean, really, like we love the flex hours and stuff, but this is where that kind of stuff comes in. Where even if you don't, "Oh, I'm just me and I just work one app," you're still a business, or at least you have to think of yourself that way and make sure you're dealing with this stuff that way. You can't, because you're not getting a W. I mean, it should be clear, you're not getting a W-2 anymore. You're not getting easy taxes that are already done for you because you've been paying them all year.
Yeah.
I mean, it takes all of what, 15 minutes to do it if you just work W-2 and it's like, and you're early on in your life and you really don't have much to. But moving on to number two, you're on your own for withholding and paying your taxes. And I know there's a few ways about this, but
Yeah.
um,
Yeah.
what do, what?
And again, I go back to the Facebook groups, and I'm not nearly as active in a lot of those groups as I used to be. I mostly sit there and kind of lurk, and especially just to try and see what the questions are that people have. But I am just blown away how many people are like, "Where was my withholding? How come they didn't take any money out of my paycheck?" And it's like, because you don't get a paycheck, not like an employee's paycheck. Your company, your business got paid, but because you're doing this as a business, um, DoorDash isn't taking money out of your paycheck for you. And um, it's, I mean, think about it this way. You go over to the steakhouse and you have yourself a nice dinner, and you go and you pay for it, and you're not sitting there and taking a little bit of extra money here and say, okay, I'm going to send this in to Uncle Sam on your behalf. You're not taking money out for the business that you're working with, right? And it's the same way there. It's completely on your own. And people are asking, well, where do I get my miles? Where do I get all of this information I need? And it's up to you. And I would say
There's
it's even
so
up.
many different ways, you guys.
Oh,
I mean, almost every app that you're even using already is now doing. I mean, like, and I'm not. It is kind of, one thing hits and then the others copy it, or they add it
yeah.
as features. So I don't even look at it like the companies are doing wrong anymore by integrating it. It's great. It just means if you're on that app, it now off. I mean, they almost all of them offer it.
Mhm.
Literally, like I'm thinking of all the apps in my head that, the pair of the solos, the hurdlers, I
Yep.
mean, they all do it now. There's a couple things they all do, and mileage tracking stride. I mean, it should not be a big deal. Any app you have has it, and if not, I'd be surprised. I'd like to know which apps you're using.
Yeah. And I would definitely say, you want to watch those apps real closely. Um, because you want to make sure, pay attention to what your odometer reading is when you went out and what it is when you get back, and then take a look at, if you're using an app, what is your app saying? And is it catching everything? Because you want to
Yeah,
get something that's capturing everything. I'm still old school. I keep a spread. I have a Google Sheets, and so I can just write down my numbers on my on the spreadsheet, and I trust that more than I trust the GPS apps. Partly because I got into a habit,
yeah.
but the other part of it is there are so many things that can happen with your phone while you're out there that it could miss miles, and when it misses miles, it misses money. But
I'm with you, Ron. I hate to say this, but like, I guess, like, to be honest, like, if I knew I would get everything and it just wasn't another thing, and how easy the apps are, I would still have a pen and paper and a notebook. And every day, because my system's pretty easy. I understand there's other things you have to feed into, and it's hard sometimes as a gig worker to be able to put some money away for what might happen, but it's very important. But it's so hard to get there. But at the same time, I would like to track all my stuff because I know, a, running an app that's tracking not only the miles, like you said, can have glitches, but it also, some people run it, check the actual, like, routes you made. You know how much that's burning on your phone? Like, that's another thing, just burning your battery away and, like, using your phone up and heating it up.
sure,
But pen and paper for me was simple because, like Ron said, I could start my day, write the odometer. Okay. Now I have a full tank of gas because the night before I fill up my gas and I wash my car. So the day's ready when the day starts. I'm
yeah,
full, I'm loaded. And then I just write down the odometer when I'm done. I go fill it up again. And that's how much I spent on gas. Now, that doesn't work against the cost of me doing this business. There's way more involved, but that is my gas. That's exactly my gas to the penny. That's what I spent.
yeah, and that's and we'll get into that more in a few points down, as far as getting into the specifics about miles in your car. But the kind of thing is, it's just how many times I see that question of how am I going to get my miles? And it's like, that's your job. And
Yeah.
even questions like, well, I didn't get my 1099, and you don't have to have your 1099 to file taxes. That's your job. And it goes back to that first point. You're a business. You're being taxed as a business, and that's your job to keep track of your money coming in and your money going out. That's completely up to you. And if you didn't do that, it's not DoorDash's fault or anybody else's fault. That's just, it
Yeah.
goes with the territory.
But so Ron, okay, let's be honest. A lot of people have not done that.
Sure.
Instead of just the like in 5 hours having 15 cups of coffee and just writing down a bunch of crap. What's an example strategy you'd use? If I know that didn't happen to you, but if it
Mhm.
did.
One of the best things you could do, um, and with different apps, it works differently. DoorDash probably provides the least amount of information, and if you didn't track anything with DoorDash, you might be kind of screwed there. They do send out an email, at least they have in the past. Usually, it's late February, so it's still a few weeks away as we talk right now. But they do send out an email with an estimate. Their estimates have gotten better. Now they're capturing about 80% of your miles instead of 30% of your miles, at
Mhm.
least for the deliveries you did with DoorDash. You can look at your reports from Grubhub, because they'll show you like the miles for each delivery, and you can use that as a basis. The IRS does let you go back and reconstruct a mileage log if it is based on evidence, if it is based on some kind of information that shows that you actually did that driving. And so, like per mile listing from Grubhub, or going through all of your trips on Uber Eats, you can see the details enough to get an idea how far you went and things like that. So you can add all those up and create a log that way. It's going to take some time. Like you said, it might be those 5 hours and a few cups of coffee, but you
But
can do those
the other
things.
thing is too, guys, if you've been doing gig work for a while, or even anything that captured it before, you should on
Mhm.
your last taxes have what your ending odometer were. Like if you're in a real, where
Sure.
was I even? You
Yep.
should be able to go to your last year's taxes, see what, because you're going to have somewhat of an end result there. And that's at least, I mean, again, hopefully that's not where you are. I guess what I'm trying to get across there is I know that a lot of people are there, and I
Sure.
guess I should have probably said what you just, at least go spend that 5 hours and a couple cups of coffee, because it could even be more, but like at least put that in. Don't just kind
Yeah.
of get worried and make a bunch of stuff up.
Yeah. That's the one thing you don't want to do is just make an estimate based. Okay, I made
Like
a thousand
literally just
dollars.
throwing
So
darts. Don't do
yeah,
that.
yeah. That's the thing that can get you in trouble more than anything. You've got to have evidence behind it. The IRS requires a written log. It's
Mhm.
got to be a daily log that tells them how far you went, um, what your business purpose was, where you went, and how many miles you drove.
Right.
And you can do that either by handwriting it or a spreadsheet, or most of the GPS programs
Yeah.
will provide a a downloadable log
Yeah. I was
that
just
gives
going
you
to
that
say, almost,
information.
I don't even know if there's any anymore that don't have the export function to something.
Yeah, the only one that I've really had trouble with, and I have a feeling I haven't looked at it lately, was Solo. They're still trying to figure out their mileage, but they had
Mhm.
basically it just had like the number of miles, and
Yeah.
it wasn't capturing a lot of miles. But I know that Solo has been doing a fantastic job of just keeping on top of things and trying to improve things. So by now that may have been fixed. But one last tip, if you forgot to track your miles, is dig into your Google Maps and look up the timeline function on there, because there's a good
Mm.
chance that you've been tracking miles without even realizing it.
Yeah,
It's a
running
little
in the
bit
background.
creepy.
That's right. Yeah, yeah, no.
It's a
And then
little bit
turn, and then
creepy,
after
but
you're done, export it and turn it off. Because again, I think it's a feature you can turn off. You
you
don't have to
can,
just
yes,
delete Google
you
Maps.
can
You can
opt
turn
in
it off,
or
but you
opt
got to
out.
get into it. And
And
by default,
sometimes,
it comes. And by default, like everything with Google, it comes on.
yeah,
So
but it will actually show, you can see a map of where you've been just about every day if it has been enabled, or if it's enabled. It
yeah,
may not be. And if you don't have Google Maps on your phone or something, if you're running an Apple and you never put that on, it may not. But that is one place you can go look, and you can at least kind of see where you've been. And when your map is showing you a whole bunch of squiggly lines that are going all over the place, that was a day you were out on deliveries.
yeah,
If it's just out and back, that probably wasn't a delivery trip, unless you're doing something like a curry or something like that.
yeah, yeah. See, for
But
me, it does matter because I'll have those days. I've even shared them with you where I went to um, Grand Junction and back.
right.
I mean,
Right.
yeah, that was a big payday, but man, that's a lot of miles. I can't miss that day. Like
Yeah.
it's very important because in the
Yeah.
end, I mean, I know you're trying. I think that here's what happens with some people. They're trying to cut corners, but I think over the years I've started learning you're not really cutting corners. I mean, like I'm not talking big picture either. If you were to you have to explain it. I'm just talking about like you're not even really. It's not helping you that much to try and do it on the
Sure.
scale that we'd be doing it.
Sure. And the question you want to ask yourself, I guess, at the end, is, okay, is it worth it to go through and try and figure out, okay, you forgot to track, and now, depending on which apps you're on, you might be having to kind of look through um, all of your trips on all of your apps to try and reconstruct a log. And it's real easy to think, well, heck, that's an awful lot of work. Is it really worth it? Well, when you
Hmm.
figure out that every mile is knocking 60 cents off of your taxable income, which usually means about 15 cents less in taxes. 15 cents isn't much, but if you put 20,000 miles on for the year, now
Hmm.
all of a sudden you're talking about, $3,000 difference in your tax bill. That's huge.
Right. Yeah.
And so it's those things that, you know, you kind of have to look at it like you're getting paid for doing the work. But that's why you kind of want to go back to this idea, you're on your own and you should be doing it from the start so that you don't have to do this
Right.
now on April
But
15th.
then, but we got to be honest. Most people, and maybe not. I haven't done anything, but they're not. I mean, most gig workers just aren't where an accountant would want you to be. Let me
Right.
say it that way. I mean,
Right.
it's just a fact. I know a lot but a lot aren't that bad off either. And they have a method to it, and they're doing
Sure.
it right, and that's fine. But I also want to point out nobody's dumb here, guys. I mean, I got
Yeah.
to tell you, like, I got sidetracked last year by the earned because I'm divorced and I split it with my ex. Which years we claim max? There was the earned income credit thing was a whole mess, and I checked a box wrong, and I didn't do anything else wrong. My taxes were correct, but it held up my money for like I don't even I think I got it like a month ago, like
Yeah.
or 2 months ago.
Yeah.
I'm being serious. Like I did it before I filed before the deadline. And because of that little one checkbox error that really didn't even throw the numbers off. If you look, it was just it was a confusing wording because it was added because of all the things that had happened with the pandemic too, on top of just earned income. It's just crazy. So nobody is that. I mean, unless you're, you know, Marissa or a CPA or you're somebody out there doing this for a living. Nobody's like perfect at this. So just look at everything three times. And if you have a friend, even not another CPA, you don't have to go to a CPA, let's say, even a friend to look it over or buddy up with another gig worker.
Yeah.
As long as you guys are kind of willing to share your numbers. I see that a lot of people on YouTube share what they earn in a year, in a day, everything. So it seems like a lot of you could buddy up. That would be a huge thing. Look each other's taxes over, help each
Yeah.
other out. I know that because I'm getting to, in a perfect world, you want a CPA, but you might not have one. That might not be ability. And that's why you're watching this. So let's move to number 3 here. Let's go to your gig taxes are based on profits or what's left after expenses. I think of that as the same thing, but okay.
Yeah. Yeah. That's just
Yeah.
just kind of a plain English, I guess, explanation
Yeah.
or description.
Yeah. Yeah. I get it. Yeah.
And that's and that's a big one because one of the things that a lot of times people get freaked out about, or they ask, well, how much do I need to save for taxes if I'm making $50,000? That answer is going to be different for everybody because you might be driving a mile for every dollar you earned, and you don't have to save quite as much, but you're not making as much money because of your costs. Somebody else is maybe, they're making $2 for every mile that they drove, and they're going to have to save a little bit more because a larger percentage. That's because there's less profit left over. Um, And so, but sometimes people they're freaked about that front end number, the 1099 number. And the important thing is not the 1099 number. It's your profit number. It's what's left over after expenses. And that's why
Yeah.
those first parts were so important. You've got to track your stuff because that's reducing your taxable income, which means your taxes are going down.
Mm-hmm. Absolutely.
And something else that I kind of want to point out, and I even use the terminology sometimes myself, is like we'll talk about things like your miles or some of your other things as tax deductions. And I tend to say those aren't really tax deductions. Your tax deductions are things like your charitable giving or your standard tax deduction of 13,000 or 26,000, depending on if you're married or single, or your mortgage deduction or things like that. Those are the tax deductions. Your
Let
costs
me
for
ask you this:
delivery are
is it
business expenses.
a charitable donation that I let DoorDash keep or Uber Eats keep about 70% of the money? Sorry, guys, I had to get a joke in there just to lighten the mood.
It sure feels like it
By no
sometimes, isn't it?
means is that right. Ron will clarify that now. He'll say
Well,
no.
it's
So,
a charitable donation when you're taking those $2.50 orders.
I mean,
You're
because
driving for
honestly, I mean,
charity, my friends.
you guys, we got to laugh through this. I mean, to not laugh at this and be in this industry, I don't know what you're doing.
Yeah.
Because it's got to straighten out. The world's going to the gig economy, but I mean, like you got to be able to roll. Sometimes I just want to put my hand through a wall. Other times I just got to laugh with it. Like, I can't believe what I'm seeing.
Every dollar you track, because of this whole thing about profit, every dollar you track on average is going to mean about 25 cents less in taxes. Or every dollar you fail to track means you're paying 25 cents more than you have to,
Or at
because of
least
how that
levels
works.
of that, like
Mhm.
25 being if you're doing a really good job.
Well, that's because you got about 15% for self-employment tax and 10% for income tax. And of course, that
Mm-hmm.
income tax is going to vary all over the place, but that 15% is constant. And we'll
Yeah.
get to that in a little bit on, a little more detail later on. But every
Yeah.
dollar basically means about 25 cents difference in taxes, about a quarter of what your profit is. And if you don't track that, you're paying more money to Uncle Sam than you're required to. So
Yes.
that's why that profit thing is really important.
Yeah. So you can write off business expenses even when you're using the standard mileage deduction.
You
Now,
know
I know
what?
this too, but you need to be careful on this.
And actually, that was a mistake. I think maybe I mistyped that when I sent that to you.
Okay,
You can
because
write off
I
your
was thinking
business
like I was
expenses even
thinking
when using,
office space if you do it for creator content. Like
and
there
that's
are
true.
some things,
There are some things that you can do.
but
Yes.
like the overall for just a gig, and there are a lot of content creators
Yeah.
probably again, guys, like probably watching this. And to be
Yeah.
honest, like, there are some things. I mean, I'm trying to think of what else. I'll search it out too. There's probably more, but Ron, do any come to the only one that came to mind for me was if you have a space in your house where you're doing all your creating from,
And
that
actually,
that
and
should be you should be calling that.
sure, sure. That actually should have been said, that should have said the standard tax deduction.
Okay.
And so, because some people kind of feel like, okay, I'm renting, I don't have a mortgage. I don't have 13,000 or $26,000 worth of expenses that I have to write off. So I can't take I can't take my miles anyway. And or I can't take these expenses anyway. So they make that mistake. And that was kind of the point that I was getting to. And there's it's kind of weird because there's a standard tax deduction and there's a standard mileage deduction, and they're two different things. But
Right.
with the standard tax deduction, which knocks off that either 12, 13, $26,000 off of your taxable income for income taxes, you can still take all of your business deductions, even if you're taking the standard deduction and you're not itemizing. That's because it's a business expense and not a tax deduction. Your
Hmm.
miles are a business expense. Your cell phone bill is a business expense, all of those different things. So you can take those regardless. And
Right.
And that is a misconception by a lot of people too, that says that that kind of fits with the wording on this one, is just like you said, some people think, oh, I can't take anything else if I claim miles.
Mhm.
That standard mileage deduction is a choice between taking it by the mile or taking the actual car expenses, but it doesn't weed out any other type of expense. So,
And I think that you guys, if you want to learn, because we will, I mean, we're touching on things here, but if you want to dive deeper into this, I would go watch the last year video, which I'll put the link in here, that Ron and Marissa did on this channel, because Marissa really got into the few situations where you wouldn't, in our
right.
area, where you wouldn't want to use standard, or where you wouldn't want to use the mileage. I
Right.
mean,
Yeah, there
that's
are
just
some cases, and
very
somebody
few though.
had a
I mean,
question up in the comments that about a new car, and there are some areas with a new car where it's maybe more
mhm,
advantageous, but and we'll talk about that a little bit more in a bit too. But
yeah. But yeah, so I mean, for the most part, just kind of know that too. Like if you're questioning that, especially with the fact that I think this year it went up twice, even, didn't it?
yes,
Standard,
yeah, because they
like what you can write off. And I know that we went to flat rate pay for Uber, but it became more than my Uber per mile from the old rate card,
oh,
because it was 55 cents a mile when doing Uber X in Denver,
okay,
plus 11 cents a minute. Okay, so it's over it now. So now they're paying. I know that it doesn't mean this, but I always get weirded out when that kind of thing happens. Like, wait a minute, I'm being paid more in the refund than I get from Uber.
yeah, yeah,
So, um, but okay, mileage is, I like how you worded this one. Mileage is usually your best write off, and it's not even close.
yeah,
So maybe you can even take it a step further here. And
sure. Okay, so and for most of us, that's our. I mean, that's a huge expense, and in fact, the reality is, guys, we are if you're using your car for delivery or ride share, you're able to write off an awful lot that most businesses can't write off. You know, if I'm an accountant, there's not a whole lot of miles I can write off. And the other
right,
side of it is, for most of us, we can write off a heck of a lot more than what it actually costs us. So, like you said, that the mileage rate went up two different times last year. So they introduced it at the beginning of the year where they pushed it up to 58.5 cents a mile.
right.
But then gas prices went crazy. And so I think it was only the second or third time they've ever done this. They made a mid-year adjustment so that any miles driven after July
Yeah, it was like,
1st
yeah, okay, July 1st.
were 62.5 cents. So it's 58.5 cents for the first 6 months and 62.5 for the second 6 months. And
So is that retractable though now? Are they gonna pull that back, or are they gonna say that you just got, because I was
yep,
curious, because I don't think they've ever pulled it back,
no, and
ever.
basically every year they just announce a new rate.
Right.
So this year, I think it was 65.5 for 2003.
Oh, wow, okay.
So they jumped up. They jumped up actually more this year, even though gas prices are
Right,
calming
because I
down.
think it only went up 3 cents last year when it went to
Yeah,
58.5, it was, like, at 55.
yeah. And so yeah, so in 2003 it's up to 65.5 cents. And so it's but that's kind of huge when you think about it. People were freaking out when the gas was hitting $4 or $5 a gallon. But when you think about it, you got a car that's getting 25 miles a gallon, and at the worst, it's costing you 20 cents a gallon in gas, and all the other costs of your car usually don't tend to add up to that much.
Yeah. No.
Um, outside of gas, well, the big one is usually depreciation. And
Mhm.
if you got a new car, um, something you ought to do sometime is run a blue book on your car. And if you're driving 25,000 miles a year, run the exact same thing, but the only thing that you change is add 25,000 miles. and you'd be amazed how much less your car is worth because of those miles.
Yeah.
And for new cars, for more valuable cars, that's often 10, 15, 20 cents. A Tesla is going to cost you more in depreciation than what your Toyota Camry costs you in gas, you know. And a lot of people don't realize that, but it's a real cost. And so, but for most of us, and especially if we drive a lot of miles, it's pretty unusual for the actual cost when you include everything, including maintenance, depreciation, insurance, all those things. It's usually going to run maybe 35, 40 cents a mile. So you're
Yeah.
getting to write off about 50% more than what it actually costs you. And that's a huge advantage for gig workers.
Yeah.
But
And all the more reason to be, again, going back to the tracking your miles. I mean,
yep.
might be the biggest thing we're going to eat. It should be one of the biggest takeaways you guys have. And I know you all know it, but having your exact miles and just having the comfort of knowing, however you did it, that you have a version to produce if need be. Like, no, I did these here. I mean, however you do it, paper, pen, Excel sheet. You want to do it online through Intuit or something. You want to do it through any of the apps, Gridwise, any of those. Um,
Yep.
I mean, they all work. Just pick something and do it though. And if you're going to do the apps, make sure you do flip them on though. A lot of, like Ron was saying, I got to tell you guys, when I was doing the early days of rideshare, I forgot all the time. And it did a lot of them. I remember, I think was it Stride? I know they do health insurance, but I think they were doing this too.
Mm-hmm.
But I was using one of those, something I haven't used again, but for one of the years, and it would just let you input at the end of a day. So still inputting at the end of a day, but even that was hard to remember.
Sure, it is.
So I'm like, oh crap, I didn't hit on.
And honestly, if you're really bad at remembering to do that, it might be worth the $5, $7, $10 to pay for the subscription on Everlance or Hurdler or something like that, because those do an automatic. They capture everything when you're going out, but then you just have to go through and tell them, okay, this was business, this was personal, this was business, this was personal.
And yes, guys, I have a referral link for Hurdler, but I actually took it out of the videos a while back. But I still promote Hurdler. I like it.
Yeah.
I don't have an affiliation link, so I've got nothing to share with you guys. This is a personal thing. It's an opinion that Hurdler is a good one.
I think, in my opinion, it's the best. Just
even its free version, it's beta or whatever.
The free version runs circles around Stride, and I think is even far better than QuickBooks Self-Employed, which is a $15, $16 a month program.
Yeah, I was going to say there's some QuickBooks and some upper end Intuit stuff that maybe blows it out of the water, but it's way more expensive.
Yeah, I haven't seen anything.
Most gig workers are on a budget. They're either going to do the free, which the free one of Hurdler, like Ron said, is great. Yeah, and if you do upgrade, you would upgrade for the few reasons that you can see them on the website what they are. If you need them, upgrade to it, because even that's worth it.
It's just a good app. Version basically just has automatic tracking. Is the big difference, and it's a few dollars a month. TripLog, if you're looking for just straight mileage tracking, TripLog is another real good one, because they have a gig mode, which basically you just tell it which gig apps you're working, and anytime you've got those apps open, it's tracking your miles. It just automatically turns it on. That way you're not spending as much time sorting through which was personal, which one wasn't. And so that's got a fantastic feature there. That's another one to look into. But if you tend to forget, get a paid subscription.
Yeah, absolutely, because it will pay off. I mean, that's another thing. Look at, what is it a month, Ron, or whatever? Do you even know?
Between $5 and $10, depending on which.
Okay, so let's even say it's 10 though. Okay, and no, to a lot of people that's like, that's another 10. I can't do it. Well, you guys are doing music subscriptions, this, that, the other. I see that you're spending money other places. That $10 is only, and there's always a yearly discount too. But even if you just paid the monthly at a 10, which probably it might even be lower, but that's $120, and I guarantee you're going to do $120 better on your taxes.
Yeah.
Probably way better. So
You go out and you spend a day driving and you put in 150 miles. If you forget to track, that 150 miles is, what is that? That's, I kind of doing the math real quick here. Um,
How many days you say?
just a one day, you go out and drive 150 miles in one day.
Uh-huh.
That's $90 that you can't write off because you don't have a record of those miles, right?
Right.
Well, if it's, self-employment tax is 15% and income tax is 10,
Hmm.
that's $20 already that you cost yourself
Yeah.
for one day of
Yeah.
150
Yeah.
miles. So, that's
And
like I
if you
said,
go back to having to reconstruct this thing, you're
right.
either going to go way over and that's a big problem, or you're going to be way under and just screw yourself. So
Yeah.
not doing this is just devastating you, because even if you're good with numbers, even if you have that kind of brain, you're not going to be exact. You're going to miss some stuff.
Yeah.
So whether it be I mean, it can be paper, but make sure that you're using the odometer, that somehow that you're truly, truly tracking it, because it does matter huge.
Yeah. Yeah. And that's kind of my main point though, is that's the one thing that you really want to focus on. You want to make sure that you're capturing every mile that you're driving, if at all
Hmm.
possible. Now, I tend to
Yeah.
kind of go the other way. If you're real good at starting and stopping or writing down stuff, you're probably better off with a free thing or with keeping your own log, because those automatic loggers, they usually wait till you're driving a certain speed before they start tracking. And so they might miss 5 or 10 miles a day if you're doing it full time or something like
And
that.
the other thing with those is
Mhm.
that they need the always on function.
Yeah. Yep.
And I don't like giving I'll be honest, I only give that permission to one app on my phone, and that's Curry, because I get a ton of Curry orders that are amazing. So it's on all the time. But even when I had to do it with an app like that, I didn't like it. But the more of those you run, guys, the quicker the slower your phone's going to be, more issues. If you're on an
Sure.
Android or something, more restarts, all kinds of issues. But definitely slower processing. Doesn't matter which phone you're on. Like, these kind of things can really clog it up. So
Yep.
location services, I would go in there even today and check and see what you have on.
Yep.
Make sure that you need it on, because those are the ones that are all the time, 24 hours a day. They need to know your location. And to
Yep.
me, I like questioning that. Why does this need to know?
Yep.
I mean, my guess is if you haven't done that in a while, you can turn off a few. Probably help your phone out too.
Yep.
Um,
But that's the thing though, is with miles, just kind of maybe wrap up this particular point is, you could be looking at, thousands of dollars in write-offs for miles, and everything else adds up to maybe hundreds, maybe.
right.
And there's a lot of things people try and write off that you really can't. And so, everything beyond that, there's, for most gig workers, not really all that much, and it's a lot of nickel and dime stuff in comparison. Doesn't mean you
Hmm.
don't track that. You want to track every dollar you can track, but if you're going to focus on anything, you got to focus on the miles.
Yep. And it is. It's going to be most of the biggest piece of what's going to help you
Yeah.
at the end, either whether you're paying or hopefully you're getting something back. But everybody don't think you're getting something back either. It's not
Right.
always quite how it works, guys.
Well, and
Um,
especially if nobody's taking taxes out for you in the first place.
yeah, yeah,
And
that's my point. Is be very careful what you're doing. Um, the Schedule C form,
yes.
because it's super important. And I don't know. Can you even get around this? Because they ask you to attach it through most of the QuickBooks and Intuits and
Yeah.
TurboTax.
It depends. If you're looking for a tax program, this is the
Hmm.
thing you got to look for, is something that will handle Schedule C. Now, a lot of people will try and do some of the free tax programs,
Hmm.
but a lot of the free tax programs don't do self-employed stuff.
Right.
And so if it can't do Schedule C, you're not capturing your deductions and you're paying more. And so, yeah, you're getting a free tax program, but if you can't write off your stuff and you're paying more in taxes, is that the best way to go? But that's the thing you want to really look for, because that's where it all comes together. Schedule C is a form where on the one side you add up all of your gig income, and you just need one Schedule C, even if you multi-app. So, you get your DoorDash 1099 and your Uber Eats and your Instacart and your Curry and everybody that you've made money from, and you just add up all your totals from those, put that on the income side of Schedule C.
Mm-hmm.
And then there's an expense portion that has it all broken down into different expense categories. And
Did you include referrals and stuff?
what's that?
Because I don't know if they
Oh,
still do it. I haven't seen it yet.
mhm.
But if like referrals by Uber, you and I have talked about this before, like that they kind of separate those, which can be
Yeah,
confusing.
it can be.
So are
And
you including that when you're saying put it all on this side?
yes, yeah,
Okay.
any money that you've received, basically.
Right. But I was just pointing that out, guys, because
Yep.
it can be, I don't know if they've fixed it. Maybe I doubt it. But I don't know that everybody's getting the referrals like they used to anyway. That's not the biggest part of it. But
Yeah, they've
there used
cut
to
down
be
a
like a
lot of that.
whole separate way that they broke that down. And I can't tell you the number of people who ask me, what is this? What's going on here? I
Well, and
don't
that's
get it.
why if you're full time with Uber or Lyft, um, you've got a real good possibility that you could get two different W or 1099 forms. Those two companies do things differently. Your main money that you make, they report on 1099K. This
Mhm.
year, they don't send it out until you've made $20,000 or more. It was supposed to be $600, and then at the last minute in
I was just
December.
telling somebody about that today who didn't
Yep,
know. They didn't even
yep,
know it
it
had happened. I'm like, don't worry, it went away for at least a year, but
yep.
yeah, it
It
happened.
it was supposed to be $600, but they decided kinda late in December. I was
Yeah.
amazed that they'd make a late minute decision like that. I'm not sure they legally could decide that because it was a law that was passed, but
You and I talked about that on that last podcast of the year because it was like
yep,
even their wording was like, "Oh, we're not ready for this."
yeah,
Like, you just figured that out today?
yep,
Like, come on.
and yeah, but anyway, either way, it was kinda like your fares and your tips are reported on 1099K,
Yes.
but then any incentives like your surges and, trip
Mhm.
supplements or referral fees are reported on 1099 NEC. Now, the reason that they do that is Uber's trying to say that the customer is paying you directly.
Which they're not.
They're not. They're not. Yeah, when your delivery is based on you getting this so much per mile or something like that, and it's a totally different formula than what the customer pays based on, it's a lie. It's just a flat out lie. And I'm amazed that they haven't been audited on that or something. But anyway, that's a rabbit hole you can go
Yeah,
down.
yeah, yeah, yeah. Yeah,
But
actually, if you guys wanna hear us talk about that, we talked about it on the day before or the last podcast I did of this last year, just a
yeah,
month ago. So,
but
in
they
fact, I think we went down the rabbit hole, so
we probably did. We do that a lot. But yeah, they ended up so they do that and then so the idea is the money that comes from the customer is on 1099K. And then the money that comes from Uber or from Lyft is on 1099 NEC. So they may send you two different ones. You could make thousands of dollars and not get any 1099 because of the way they do things. So they're a little funny. Your best thing with those companies is the tax document. That's going to tell you more than the 1099 forms, honestly, about what you made. But
Mhm.
everybody else, just about everybody else, uses just a 1099 NEC. And so, but anyway, all of that money goes on the income side. And then you figure out, okay, how much were your supplies? How much was your car expenses? How much was your each of these different categories? You fill that out on the expense side. You subtract your expenses from income, and that creates your profits that, like we talked about earlier, your taxes are based on your profits. That's the profits that get moved up to your 1040 tax form. And
Yeah.
so, in a lot of ways, your Schedule C is like you're writing your own W 2
Mhm.
because you're writing the form that says what you earned. And so that's where that is. But if you're looking for tax programs, you got to make sure that it can run Schedule C. Because if it
Yeah,
can't,
I would even go as far now as to say make sure it has, and that you look into it too, that it has gig economy wording, because
Mhm,
most of them do. They have like even some of them have packages for gig economy workers.
mhm.
So like look at that, but then also in there, make sure, like Ron said, the Schedule C is in there. But like they're starting to get pretty dialed on this stuff, and that even makes it easier to go through. So I'm trying to say it for those of you who put it off till the end every time, and I always talk to you a lot, and a lot of you in April, and it just kind of freaks me out because I've done it too. I'm not even gonna lie, I've done it too. Um, unfortunately, Marissa probably would never let me pull that grab anymore or something. I don't know. And by April 1st, I better have that in. I'm thinking. Um, and even that's probably pushing it. But okay, moving on to you also have self-employment tax, Social Security, Medicare. This gets a little confusing, I'm sure, for people because they thought, wait, I thought I was an employee. I thought I wasn't paying into this. So,
Well, here's where that word come from, and it creates a
mhm.
lot of confusion because you're like, wait, why do I have to pay an extra tax because I'm self-employed? And that's what it feels like.
Yeah.
But
Why do you?
here's where they came up with the terminology, and it's really pretty simple. That your FICA taxes, which are your Medicare and Social Security, are technically they're called employment taxes. And so when you're self-employed, your version of those taxes is called self-employment taxes. That's
Hmm.
that's basically all that it is. So it's not an extra tax, but you pay extra because the other side of that is, and there are a lot of things about self-employment tax that you really self-employment tax is the biggest tax landmine for most gig workers for a lot of reasons. First of all, because it's based on every dollar you earn. There's none of that $24,000 standard deduction reducing that. You start paying from dollar one.
Hmm.
And uh, the second problem is that as an employee, your Social Security and um, Medicare taxes are 7.5 or 7.65%. When you're self-employed, it's 15.3%. We pay twice as much.
Right.
Now, Uncle Sam's not getting more money. What's happened is that as an employee, you pay half and your employer pays half. Well, when you're self-employed, you pay your half, and since you are your employer, you get to pay the employer's part as well. So
Yeah.
that's what doubles it.
Yeah.
And so um but that's 15.3% of every single dollar. And you can't reduce that by itemizing deductions or taking your standard deduction. You could go out and you could make $50,000. And for income tax purposes, maybe you can whittle that all down to $20,000, but you're paying tax on that full profit at 15.3%. So you're almost always paying a lot more in self employment tax than you do income tax.
Yeah. I think one of the biggest things that I guess that I'm just thinking of a lot of people who end up, and you deal with it too, Ron, like
Mhm.
people who come to you and kind of getting close to the deadline. They don't think of it that way. They just kind of see it as, what can I do over here to offset this? And they just view it, and I'm always like, oh, you. I mean, you don't.
Yep.
God, I don't want to learn tax law. I would rather throw up than have to read that book. But like, I mean, no, seriously. But but you got to have some understanding of these a little
Mhm.
bit. You don't have to know every detail about it, but you got to understand why it's broken apart. I think.
Yeah,
I mean, if you can't on any level and you're just not sure and you're just paying it, I honestly think it would be worth it. It is time to go talk to an accountant.
it is. Yeah, if you're confused, absolutely get somebody to help you with your taxes because they're going to catch those things that you wouldn't have thought of. When
And
when
some
I was
places aren't as good as others, but there's still something.
Mhm.
I mean, I don't know. I would just you know, there's a lot of places, and maybe some are good, but there's a lot of places that advertise the $99, and then they have a way of upcharging you to do other things and whatever. But there's some that just do it for that cheap, and maybe some are good, but some of them, they're probably gonna be better than you. I would say, you know, don't spend the most, but try and spend some that where somebody will maybe will talk to you too and explain what's going on.
Yeah. Yeah. You get what you paid for.
Yeah.
And some of the cheap stuff work real well if you already kind of know what you're doing.
Yeah.
But if you don't, you could really miss out on a lot of things if you don't know what to look for. When I was working with a nonprofit, and we had a kind of a youth training program for employment skills, you know, so we did these internships with the kids, and they'd get their first paycheck, and it was always like, who is FICA and why are they getting my money? You know,
Yeah.
but you know, the thing is, and you've done this especially probably when you've started out your first job or something like that, and you didn't make that much money, so there was no federal income tax taken out, but there was always, always, always Social Security and Medicare being taken out. And it's the
Mhm.
same thing with self-employment tax. And so, you know, if you clear $20,000 after all your miles and everything else are written off, um, you are going to pay $3,000 in self-employment tax. And
Yeah.
that's regardless of your filing status or any of those other things. That's just going to be there. Now, maybe if you had enough money taken out in other things, you get tax credits, that might mean you're getting $3,000 less in refund, but it's a $3,000 hit to your tax bill, and that's going to be there. And that's the one you got to really keep an eye on. So, that's a huge one. You just got to know that it's going to be 15% of every dollar of profit, which
Yeah.
takes you back to why you got to track those miles and expenses and everything.
Yeah, I mean, if you guys heard what he said on the 150 loan, it was a $20 loss if you didn't do it. I mean,
Mhm.
that's one day. It's one
One
day.
day.
I
Yep.
mean, the fact that you can be off $20, you can lose $20 that should, however it goes, should be helping you. You could lose that in
Yep.
one day of not tracking.
Yep.
And a lot of us we know work, a lot of the gig workers I would know work 6, some of them 7 days a week.
Yep.
And so that, I mean, that you can't afford to be down one day. Um,
Right.
but okay, let's move to, we got 2 left, you guys. We got add your IC profits to other incomes like W-2s or whatever else you might be doing, other IC projects, everything determine taxable income. Um,
And
so if you're
honestly,
doing
this and
multi
number 9.
IC ones, that's one thing. But what do you got to? Yeah. Bring us into the W-2 and IC mix.
Okay. So here's the thing. Self-employment tax is based, and that's why we kind of put this on here, is self-employment tax is strictly based on your self-employment profit, and it's on every dollar. If you made $3,000 profit, you know, you're about 4,500 or $450. I don't want to go too high. Yeah, $3,000, $450 in profits. If it's 20,000 that you made in profit, you know, you're about $3,000 in self-employment tax. That number is going to be pretty steady no matter, you know, it's going to be a steady percentage of your profit, what's left over after expenses. Income tax is a totally different animal because there's so many other things that go into what your income tax is going to be. Are you filing joint or are you filing married? Are you, um, do you have dependents? Do you have, are you itemizing or taking the standard tax deduction? All of those things can vary. Do you have other income? And you know, if you made up to $20,000 as a married person, you're paying 10%, but you're paying 12% on everything over that $20,000, you know, so how much you made, there's a different percentage. So in a lot of ways, self-employment tax is nice and easy,
Mm-hmm.
15.3% of your profit. But
Mm-hmm.
and really this 8, and then you can go ahead and put up number 9 if you want to also, because
Mm-hmm.
those two kind of go together to figure out yourself, you know, your income tax. Your income tax is based on a whole bunch of different things. And that's why it's really hard to say, how much am I going to owe if I made this much money and drove this many miles? There are too many other wild cards in there for somebody just to say without knowing that other information. because all that other income goes into what your income tax is going to be. But when it's all said and done, what happens is on your IRS, your 1040 tax form, what you're doing is you're first putting down your income, all the money that you made. And that's going to be your W-2s, that's going to be, investment income, and it's going to be your self-employed income. Your profit off your Schedule C goes into that mix. And then you take out some deductions. There's a big one that we get. If you made $25,000 in profit, you can write off $5,000, whether you itemize or not, as what's called QPI. It's a 20% write-off there. All that comes out to kind of adjust your income up or down to get your taxable income.
I have to do this. You guys, that was a legit tip and trick right there. I mean, people, we don't like tips and tricks, right? But that was a legit tip and trick right there.
No, that's and that's a huge advantage of being self-employed. That 20% is huge. There's actually another 7.65% that you can write off too. But so you're taking all of your deductions off, and that gets you to your taxable income. And so there's so many wild cards that income tax is a different animal than self-employment tax. Right. But then when it's all said and done, this last point is that your total taxes are, you figure out your income tax bill, and then you add your self-employment tax, and then you're taking out all the things that you paid in. So if you had money withheld from your paycheck, if you did weekly payments, your estimated payments, and your tax credits, which act like payments, all those come off of that final tax bill. And that's going to determine whether or not you get a refund or the money that you pay in. So there's a lot of moving pieces, but I don't know. In the end, I don't think it's quite as complicated, even though maybe I made it complicated, and I apologize if I did.
But, no, I don't think you did. In fact, because I think it's, even if people are listening and even if they're writing down a note on something and just hearing it, I'm not saying osmosis, guys. I'm not saying just put the pillow under or put the book under the pillow. It's all going to come to you. I'm not fully saying that, but you're taking it in. Listening to something like, I listen to some people and they don't know what they're talking about. And that scares me because, well, for me, I feel lucky because I notice it, but it scares me because there are people watching that. And I'm like, and I'm thinking, and I'm again, it's not even, I'm not even thinking specific people because there's a lot of them, but I'm thinking, dude, don't do what he's saying, or he, she, or he, whoever it is saying, don't do that. Don't. And I just know this is not what you do.
Yeah.
It really just, it drives me crazy. I mean, because to do this wrong and to listen to somebody else and do it wrong, there's a lot of comments out there about how you don't get your tax advice from YouTube. I'll agree to that. Ron and I are trying to do something different here and try and just help you guys out a little bit, understanding the terminology, what you should be doing. But we're not, again, we said it in the beginning, we're not CPAs. We're not, we've just been through this enough times. We've talked between us enough times about all this stuff.
And I think there are two different things that you can do, when it comes to that. You can try and give advice, and that's what I do not want to do.
Yeah.
It's not for me to give you advice, because anything that we said on here, it really is not advice.
It's just general knowledge you should know.
Other than maybe some tips like, okay, look for self-employment for the tax program you're looking for, or some things like that. Right. But it's, or you can give advice or you can educate. And that's kind of what the approach is that I've always tried to take is, I want to educate. I want to just give you the information and you can apply it yourself. But in the end, man, if you've got any questions at all, you've got to get a tax pro. You've got to get a tax pro. And
also, if you want to rewatch this video and pull up the websites, and you have the ability to do that and do it side by side, I don't know. It always helps me to read something too while I'm listening.
And if you go to the entrecourier.com and then click on the tax guide link on the top, it's an article that basically covers all these points that we talked about. But then throughout that, I link to articles that go into more detail about the different topics. So if you want to know more about
including the new ones that you posted for this year.
Yeah.
So are they linked currently in that?
Yeah, I think I've got, I'm hoping I've got everything up to date. But, so if you want to know more about mileage, I've actually got articles that talk about what miles you can track, how to track miles, and what to do if you didn't track miles. So there are 3 different articles about mileage, and that's what I wanted to do, was give you something a lot more in depth about the details when you need the details, but without trying to put it all in one big article.
Exactly.
Because
And one
otherwise your
thing,
eyes glaze over if you have a 20,000 word
yeah. And one
blog
thing I want to
post.
say to you guys, if you haven't already picked up on this, which you probably should have if you already don't know Ron from before, Ron writes these articles and has been for years. His website's great, but he also is a gig worker.
Yeah.
So he's constantly every year he's learned more. So these aren't just copy paste last year's one. He's got these new ones like on DD and UE, like those are specific to this year.
Mhm.
And he's still working in the gig economy, so I mean he knows he's doing this and no, this isn't right, and then he also knows how to do it, what to do. So there's a good resource for drivers, because a lot of this stuff, like you said in the beginning, is either so overview that it's worthless. I'm going to be honest with all of you guys right now. They're doing it to get people to their website, and they're trying to put it out in pieces, like, oh, we put out another tax piece, because this time of year, if you put out tax pieces, they do very well with the search engines. However, I see a lot of companies do it, and they're like saying, here's what you need to know, and it's like like 3 paragraphs and some bullet points. I'm like, dude, I don't even read it, because I'm like, there's no way that can tell you what to do.
Yeah, I think, sometimes I'll do that. I'll take a look and see what's ranking when you search for DoorDash taxes or Instacart taxes, and a lot of those top ones, you look at the websites and you get like bankrate.com, and it's like,
Mm-hmm.
who there has delivered a single DoorDash delivery or whatever? And
Yeah.
so, there's a lot of stuff out there, and some of it you just kind of have to use your head a little bit and say, does that make sense? And unfortunately, it was kind of like I talked about earlier. There was one guy that had a lot of subscribers that did a tax thing, and he didn't even talk about self-employment tax, which is a lot more that you're going to end up paying than income tax. And
Right.
and so um, there's also um, IRS has a resource page for the gig economy, and
Yes.
and I think just search for IRS gig economy,
Yeah, I'll
and
put
they'll
it
have
in.
some information in there.
Ron's website's in the show notes now, guys, but I'll put it in after. So
Yeah.
hopefully, if you're catching this on the replay, by this point, it should be in there. So check.
And in the end, though, here's the other thing too, is you can also try and figure it all out yourself. You know,
Hmm.
you could do that, and you could spend hours. How much money would you make if you went out and delivered during all that time you're trying to figure it out?
Exactly.
Which is
Exactly.
why I still try and say, if you want tax advice, get a tax professional. I'll try and educate and explain how it works. But if you want advice for your situation, you got to get somebody that understands self-employment, and let them walk you through it in a way
But
that
here's something
helps you.
I'm going to give a tip and trick now. So Ron, if you go read Ron's articles and you have a question, now I'm sure you could email him, things like that. But if you're on Twitter and you go read an article from Ron and you want to know more about it, Ron will engage you on Twitter big time. Like, just go find Entree Courier and ask your question about his article, and he will give you the answer. So I know that's the one. I know he's on a lot, but he's on Twitter a lot, and I see him. He literally helps a lot of people. He'll engage with anybody that asks a question. I mean, sometimes he's asking questions of other people, but that's a good platform if you do have questions, because I think that website alone, people are scared to get into lots of reading about this. This is written by a gig worker on his gig worker site, that he's a good writer who can put it in terms that you guys can follow pretty easy.
I
And I
appreciate
would
that.
say that, go and check out some, especially even if you think you know what you're doing with taxes, it never hurts. So, um, that's all we got. Let's move over to some
Yeah.
questions. And if anybody else has any, I'll just start at the top, because I know maybe some people were giving up because we weren't addressing chat. But yeah, if you have questions, please, please, please put them in, because um, I don't even know if we can answer them, but we'll try. So hi, Ceci. Hi, Josh. saw Josh had one at some point. Tracking my miles was the first thing I learned. Okay. Okay. Question. Here we go. From Josh B. Uh, about write off. Okay. Our memberships to car washes a write off. You hear different answers from it. Okay. So this is going to get to like, is music a write off?
Oh, yeah.
I mean, what do you say, Ron?
So let's start with this. Your principle has to be that there are a couple of important principles when it comes to any kind of deduction. The first one is that it can't be a personal type of thing.
Right.
So a lot of people talk about
That's why I threw music in, because that's a really
Yep.
confusing one.
Well, it is, and it is more likely to be a legitimate deduction for a rideshare driver than it is for a delivery driver.
But
And
I could argue that having Spotify and listening to podcasts makes me a better delivery driver.
well, you can get podcasts. Well, but there are some things with that. Okay, so here's what it comes down to, and this is the rule from the IRS, is that to be deductible, to be a legitimate business expense, it must be ordinary and necessary for the type of business you do. Ordinary means, if that's something that's pretty common, it doesn't have to be everybody, but it is pretty common for people in your industry to do that. And if it's necessary, and they don't mean necessary is as in, well, you can't get by without it. But the idea of whether it's necessary is whether it has a business purpose, whether it actually can make your business better or not. And then there's a third thing with that it can't be a personal expense, that you can't just use business as an excuse for the personal expense.
Exactly.
And so the car washes.
Here, I want to say one thing. Yeah, before you get to car wash, I want to say one thing about the music, though, because you hit it on the nose. When I did rideshare 2015 till pandemic, right? When that was my thing, and even when food was around, didn't do it. But when I did that, I'm going to be honest with you guys. I had satellite radio, I had Spotify, I had Apple Music, and I wrote them off for years, and I would have defended that to the T if I was questioned. Yeah. I have not written those off since, and I work tons of other apps, but I don't. Sure. I'm with what Ron's saying right now. To me, when you do the math, I don't really have a good excuse for why I have to have that.
Well, and it's not so much that you have to, but
or that it's business related. Like, how is it?
And honestly, and I don't do rideshare, so I couldn't speak to it from personal experience, but honestly, from that I've heard of, a lot of guys that they've increased their tips because one of the things that they really perfected was their ability to find the right playlist for their customers, And so if it is making the experience for the customer better, and that good experience for the customer means that you're able to get more money, or you have the potential to make more money, there's a business purpose behind it. And so I think that you could make the case for it. It's probably a little bit gray.
I was pulling this up because it relates to your car wash.
I wish I could find it right off the top of my head. The car wash is, I tended to lean more towards a gray thing. Because again, there's kind of that business purpose, but I found a document for the IRS had a document for tax prep volunteers, and they made it pretty clear that a car wash, that a car wash is considered a part of the that a car wash is considered a part of the cost of operating the car, and that, basically their statement to them was that there's not a situation. In fact, they flat out said it. There is no situation where you could write that off on top of miles. And so,
Even rideshare. Now,
even
Brian, I don't think does rideshare. I know Brian, but
right.
I'm just curious because I used to take very great pride in my, and
Right.
I did the subscription, so it wasn't like I was paying $16 a car wash a
Yeah.
day. I was paying 25 for a month.
Sure. And and that's just based on that document, I would hedge my bets on that. I would
Really?
be hesitant to use it, but I'm not sure it's, in the end, sometimes it comes down to what are you going to be audited for.
Yeah, and I mean,
And
I guess when you come to that question, it's just be prepared to make your case
right, right. Yeah,
and feel very secure in it. I mean,
you got to explain your business purpose and why is it necessary for your business. Why does, because, and I understand that case. I understand that case for it, that from the business case. And I used to kind of lean towards that. It was kind of like what I felt like about Spotify, was that it was maybe more deductible for rideshare than it was for delivery. For delivery, you got to keep your car clean, but there's a reasonable standard of cleanliness that you can maintain without spending extra on car washes.
right.
Rideshare, you got to be kind of meticulous if you want to get the, for your rating's sake and things like that. So I could kind of see the extra expense for a car wash. But
Mhm.
again, and if I find the link that I found, I'll email that over to you, and you can, or post it up in the comments here on this,
Yeah,
because
if whatever he
um,
emails to me, guys, it will
I know
be
I've
in
got it
here. So
referenced here somewhere in
okay.
one of my articles. But it's just because that was kind of an interpretation thing by the IRS. They were specifically saying a car wash would not count. Um,
So I know you don't know the answer to this, Ron, but how would you see that? Like, let's say that was the only big like flag you had in a knockwood audit. Okay, how
right.
would they treat that?
Well,
I mean,
part
I'm
of
not
it is
trying to get people to now write it off because I think my answer is they'd be pretty cool with you as long as you're not
sure.
showing sketchiness across the board.
Well, and there are, it goes back to the Schedule C, and it goes down to, you're not putting car wash down. You're fitting that into one of their expense categories. And unless you put that into other expenses, and then you have to describe what those other expenses are. But some
Hmm.
people would probably put that as memberships and subscriptions. Um, so it may or may not end up, you're going to be putting it into probably either office costs. You really aren't going to put it onto car expenses,
Hmm.
because car expenses is for the normal day-to-day use of the car. Um, I'm not sure exactly where you would do it. I would tend to probably not do it myself. But if you did, um, and maybe you'd put it down as memberships and subscriptions,
I mean,
which,
this is a good example here that Brian does curry like I do.
mhm.
Um, he's in the Pittsburgh market. So what if he's going
Oh
from
yeah,
moving mulch to food delivery or people
sure.
delivery, as Uber would be called?
Yeah, and that's where it gets a little tricky. And the whole thing about car expenses in general is tricky, because there are some things that most people don't realize they can write off even if they're taking mileage. Car interest is one of them.
Yeah, a lot of people get thrown by if I'm taking mileage, there's nothing left. That's it. That's all
Right,
I can do.
right.
And that's not true.
If
That's
you have
true.
to pay for parking as part of your deliveries, or tolls as part of
Hmm.
your route, you can take your parking and your toll fees as expenses. You put them under car expenses on top of everything else. So you add it to your mileage total. The IRS is very specific about that.
Can
The
you
IRS,
can you choose to use HOV lanes where it's an option not to use it?
yeah, because if again, that's a business decision that you're making, right?
Yeah.
If it's going to take you 20 minutes going the normal route, but HOA is knocking 5 or 10 minutes off, you're able to make more money because you're getting done faster.
Mm-hmm.
So there's a business purpose behind it. So something like that, yeah, absolutely. I think you could do that.
I mean, because Brian's saying the same thing. Ron and I, by the way, I didn't say this, and if you don't know, Ron and I have done a lot of things before, but we both live in Denver, and we have Easy Pass too.
Mm-hmm.
So we're familiar with that system. And I know that like the tollway around the city, you have to use it. But I was trying to say you can also use it going to Boulder, but you don't have to.
I think one thing you want to do is you want to make sure make sure that you're using that Easy Pass only for business. Or if you are, using that Easy Pass for some personal driving, you want to know what percentage of it was business and what percentage wasn't, and just take the part that's for business. But that is something that is not considered part of the actual car expenses.
Right.
Property tax on your car is another one. It's weird because your registration is part of your actual car expense. The property tax is not. So if you got a $500 property tax bill and 80% of your driving is for your gig work, then you can take 80% of that property tax. Okay. And the third one is interest on your car loan, because interest is not considered a part of that day-to-day cost of driving. You could have paid cash for that car, so it's not like that normal cost of driving. And so interest will, once again, it's that business percentage of interest that goes with that. But then all the other things like your insurance, unfortunately, to my understanding, and this is where a good tax pro would really come in handy, but unfortunately, to my understanding, getting a commercial insurance policy or a commercial auto policy is still insurance, and it's still part of the actual cost of driving. So you can't take that with miles.
Even the difference against what a personal policy would be, or
yeah, even that, because it's still, they don't make a distinction. And so
what if you did though? What if you did the research with your agent and said, hey, what would this have been? And then it just seems like that should be something you could do. Ron and I are professionals. We're just kind of picking each other's brains here on this. So
I would still hesitate there just because the IRS is pretty clear about insurance, just, car insurance, and they don't really make an exception anywhere. So it would make sense. It would make sense.
It should be. It
should be. But then, you get things like, okay, you're doing a lot of extra driving, so you get the roadside safety or something.
What about like the hourly insurance that Europe does though? Like, even if it wasn't the insurance only while you're doing gig work, what if it's like an add-on? But what if you had an app that told you the percentage of time that you were using the insurance for work?
Yeah, I don't know. That'd be interesting.
I mean, I know we're getting deep. This is probably where you need an accountant again.
Yeah,
guys,
and this is where it really does make a difference.
But like it's a good question for an accountant, though.
Your insurance policy you can't do, but if you had a rider, a lot of insurance, you got ride share, like a ride share addendum or something like that. I don't know for sure what you would do with that. Out of caution,
I guess my point being like
would not take it. But
right, out of caution, I would. I'm right there with Ron. Don't do it. But
I'm on State Farm, and I'm covered on State Farm. So,
but if you're gonna go talk to an accountant after seeing this, since you're gonna talk to him anyway, bring as many questions as you can. That might be a good question.
Yeah,
if it relates to you, I mean, I would say absolutely. Because because whenever he says gray area, I guarantee it's something worth asking somebody. I call it gray area too. I wouldn't do it personally,
right?
But it's definitely worth asking. So deductions when you finance a new car, this is where it gets a little weird. This is where I would refer you. I mean, Ron, I'm sure you have something to say on it, but this is where I'd refer you to the video that Marissa and Ron did last year, because she got into this a little bit more. And she also, I don't know if we even mentioned this, but you also can't switch back and forth, guys, from how you're going to deduct your car, you need to pick one and stick with it. Like if it's going to be standard deduction, you're now with the standard deduction for the life of that car that you own it. Is that right? Did I say that
Yeah.
right?
Yeah. And yeah, it ultimately, it comes down to, with a new car, it comes down to whether or not it makes sense to take that actual expense as opposed to taking the mileage. And for 1 year, a lot of times on a new car, for 1 year, there are some things that you can do where it might make a little more expense. But the second year you have that car, it could cost you big time.
Yeah.
Because here's the thing with this. Now I did mention, your interest, your business percentage of your interest, you can claim that if it's a loan, but not on a lease. Okay. If you're doing actual expenses, you're adding up all of the money that you've spent on insurance, registration, your gas, your maintenance, any of those things where you spent the money on that. And the big one on that is the depreciation. And the IRS has kind of a schedule where maybe you're writing off about, sometimes as much as 20% or a fifth of the value of the car that you can do. Well, there are limits as far as how much you can do. But in the first year with that car, you could take a special depreciation thing that is like up to something like $18,000. Maybe you spent $25,000. Well, you could take $18,000 of the depreciation the first year, which may be an awful lot better by the time you add everything else in than taking the mileage. But here's the thing about it. If you do that second year you have the car, you have to do actual expenses. And now that you've taken most of that depreciation, all you've got left basically is your gas and your maintenance. And which is like about 20 cents a mile. So now you can never write off that 62, 65, whatever it is that year. You can't write that off any year after you've done it if you've taken the actual expense or if you've taken that special depreciation the first year. So it might be good for you that first year, but it's not so good years down the line. And here's the other thing is, if you take that big deduction or that depreciation and you take actual expenses and you write off parts of it, now if you sell that car, you have to take that, let's say you've written off the entire value of the car after 5 years or fewer years based on the what it is. But after 5 years, you've written off the entire value of the car, but now you sell that car. You've got to take that sales amount as income.
Yeah. That's why every time I look at it, and when you or Marissa have told me about it too, I'm always like, I never see the reason. Like standard.
Yeah. It's tricky. It's where I would be more likely though to say you might take the actual cost is if you've got a pretty valuable car. Because year after year, you got a $50,000 car you're driving around. And, for those 5 years, you're writing off an awful lot more for the depreciation. Your cost of insurance is higher. Your cost of registration and property tax you can write off anyway. But, all of those other costs are quite a bit higher than when you run the numbers. Sometimes it still comes out above that, and it will do that for several years in a row. So at that point, it might make a little more sense. But it's just, ultimately you got to do the math. But, just like what Gary was saying, usually it's not going to be it, especially if you drive a lot of miles, it's not going to be that much. And so,
you might as well buy new.
This is true.
So I'm not,
it's,
I'm not 100% sure what I'm looking at here. The ratio of USD per mile.
I think we were talking about estimating on miles or whatever, so if
you forgot to track.
Right.
Okay.
Now there is a case where, once again, if you're trying to recreate your mileage log, and the IRS says that you can actually recreate it, but you have to document the evidence behind it. And I think Chuck is right. I've noticed that I tend to run over the year about 40%, so um and what am I saying? Four tenths of a mile per dollar earned. So it's about 250 a mile is what I average, just because of the way that I, choose, select, and everything
So
like
this is
that.
going back to when we were talking about that, and it's kind of saying like might be an easier way to break apart your year to
Yeah.
retrace your steps if
So
you had to, if you were.
yeah. So let's say you've got a mileage log for 80% of your driving, and
Mhm.
you've shown that your ratio of dollars per mile is consistent over that period of time, but you've got, 20% of your time that you just don't have a record. Because of that basis that because you've got a very clear pattern, you might be able to say, okay, I made, let's say it's a 4/10, 40% for me. I made $200 today. I could make a pretty clear case that it's reasonable to say that I drove 80 miles.
Yeah.
Now, if you're doing that on your record or on your mileage log, you want to make a note of that, and you want to document everything that you can about why you're saying that, because if it ever
Mhm.
comes to an audit,
Yeah.
that's you need to have that kind of information. Um, it's yeah, like I said, the IRS lets you go ahead and do that, but you've got to have the evidence to back it up. That's what it all comes
Yeah, I
down
mean,
to.
that's the case with everything, guys, so you should
Mhm.
be thinking that whenever you make any entry on your tax forms, like, can you
Yep.
explain it or back it up?
Yep.
Should be the question you ask on everything. So, I don't know, Ron, you know Tony, the Driven Dad, he lives here in Denver too.
Mhm.
Him and Lisa now both rent Teslas from an external place, not a Hertz that does it for Uber or whatever. It's a place that rents Teslas so that you have commercial insurance and can do all the apps and whatever you want to do for your business. So
Yeah.
they're now renting too.
Yeah. Um, and so the question there, I think, with the rental is it's kind of weird, because there's the one side where you can write off your lease if you're taking the actual expenses, but you can take miles if it's a lease. But if it's a short-term rental, you can't really write out. You
Well,
can't
he's
do.
had it for like a year.
Yeah, if it's a longer term like that, that's definitely something different. And again, that's where you really want to get with somebody who is really dialed in on that to say that for sure. But say if you went out and you rented a car for 2 weeks or for a month, you couldn't take the miles on that car because you don't own the car.
So why would it be different if you took it for 10 months?
What's that?
Well, if
Because
you
at
took it
that
for 10
point, if
months,
it's
you still
if it's a
don't own it?
longer term arrangement, then and that's where, like I said, it's weird that for a short term rental you can't claim miles because you don't own the car, but for a lease you can, because even though you don't own the car, you're still, it's kind of like the car is still in your name. You see what I'm saying?
Yeah, I mean,
And
this is
and
kind
so
of
I
where I was
don't.
going is what Gary's saying here.
Yeah.
I mean,
Um. Well, and let's say that. So he's asking if the owner of the vehicle writes off the mileage. Um, Hertz cannot write off miles. That because there are so many rules about what you can do with miles. You can't write off miles if it's more than like 5 vehicles or anything like that. But um, what they do is they just, what they do is they track, this is how much they paid for the car, and this is what the costs are of maintaining it, but this is what we're getting for the car in return, and things like
right.
that. So they're writing
This
off the
is this
costs
is a
against
guy
that.
who privately rents Teslas only.
Yeah. So
Tony
he
has
wouldn't be
two of
able to
them.
write off miles, but he could write off whatever his costs are of the car.
Right.
I don't know for sure where the line is between when it's a rental and when
Because
it's a
I
longer term lease.
this second comment that I have up of Gary's, actually
Mhm.
this is what I would think too, and this would make a problem
Right.
because you'd have two people writing off the miles.
Yeah. The second person can't write off the miles. Um,
Well,
Now, generally, so like let's look at it this way. Let's say you borrow your best friend's car for a week. You can't write the miles off on that. If
no.
you borrow it for several weeks or whatever, you can't write the miles off on that because it's their car. You don't have those costs. You got to remember that the mileage is a replacement for the actual cost. It's to simplify
So
things.
what if you're paying his car payment for 2 months and you have it?
What you do is you can then write off whatever you're paying him for using the car. You can write off your gas. You can write off what you're paying him and things like that. You can write off what it's costing you. Um, at that point, he can't write off miles because he's not driving it for business.
Right,
But
and that's where Tony's now is
yeah,
saying, but he can write off the actuals.
yeah, yeah. Well, and again, it's all for a business purpose. But because he's getting money for it,
Mm-hmm.
um, I think he'd be able to write off kind of that portion of whatever the costs were. So yeah, it gets tricky in those types of situations. And I'm not sure where the line is though. And especially like let's say with this guy that owns several Teslas. Um, Again, if you own more than 5 vehicles, you can't um, if you own more than 5 vehicles, you can't write off miles at all.
I'm sure he
You can
meant does
only do it
here,
up to
but
so many.
he's saying that the person who rents them does all the maintenance.
Right. The person that rents them does all the maintenance and everything. So his costs of maintenance, the owner can write off those costs of maintenance. You can write off the business percentage of what you're paying him for that vehicle. And you can also calculate your cost of charging it if you're charging it yourself and everything like that, if you're charging at home, um, and any other costs that you've got with it. But I don't know where the point is where you could say, that is my car, so I can, that is technically,
Right,
my
because
car.
at no point is it your car unless it's your car. I mean,
Well, and that's true of a lease too, right?
yeah.
But
So
in a lease, it's kind of like you're with a lease, it is you still register the car in your name. The title belongs to the lease company, but you still register the car in your name. And I think that may be the line right there. And if you're rental from somebody, even if it's a long term, if it's still in their name, you can't claim the ownership of it to the point of writing off miles. But I don't know where the point is that you could. I don't know, what line is it that says, okay, now you can do that and now you can't, if that makes sense.
yeah. Yeah,
So,
I see. It hasn't come up here on the StreamYard, so there it is. He said the car isn't in my name.
yeah, at that point, you might have to just go based on whatever you're paying for the rental. Um, you can calculate what it costs to charge, and you'd probably be surprised how much it actually adds up to. I just read
Well,
an
he no,
article.
he's all been familiar with the.
Yeah,
He's been doing it for a while, and they just got the second one for his wife, and so he's pretty
I just
familiar with
read an
that
article that
cost.
a guy was looking at that and kind of estimated that actually the cost of operating a Tesla was almost as much as the cost of a regular car now. And he said, and
Oh,
especially,
I think his might be included in his deal.
oh, nice,
Is that right,
nice,
Tony? You're gonna have to say, but maybe that is what maybe the chart. But I know that when we went to St. Louis for the gig conference, that I think there were like superchargers and things that weren't covered. Those he had to pay. So obviously, there's some distinction on specific ones or something that he can do.
right. I would argue that the cost of driving a Tesla is still higher
Oh,
than the
Lyft.
cost of, driving my 20-year-old Buick that I had.
He's
And
using Lyft free charging. Okay.
okay, nice. And because of it, I mean, and that's like if you own it or something like that, because all of your other costs are higher and your depreciation, the loss of value of that car. The extra miles that I would put on that car would actually be more than what my gas was on the other car. That,
Right.
on a 20-year-old car, there's no depreciation. It's not losing value. It's got a little more maintenance, but when you run the numbers, a lot of times you'd be amazed how close the cost of driving a Tesla is to a gas powered vehicle once you
Yeah.
include everything included in it. Now, if you're comparing a Tesla to a gas internal combustion engine new vehicle, that's where you really see the difference. But anyway, that's another rabbit hole. I'll stay off of that one.
He says, always tell people, unless I think he's saying he does. He always tells people, unless you drive 50 to 100,000 miles, you save nada.
And there's something to that.
I'm just a little confused because I'm just not feeling, and I'm sure Tony, I know you check into this stuff. I'm just not feeling super secure about that, about how the writing off of this is, because
I would, if I were to say one thing that you would do, understand that this is just coming from my understanding, but I would be inclined to just go with the actual expenses on that vehicle, what you're actually paying on it. I would be cautious about taking the miles, but that's in a case where you're renting it from somebody, I would track both by all means, but more than likely, what you're going to do is you're going to figure out what percentage of your miles were for business and claim that percentage of the actual cost of driving. But then you add up everything that you do with it.
I mean, he pretty much does use both these cars for
Right.
work. I mean, they got a lot of kids.
Right.
And so
Yeah.
they're not doing
Yeah.
a lot of stuff, but I mean, I'd say a good portion of those miles are work.
Yeah. And really for, rideshare or delivery, if you're doing it full time,
He's doing both, yeah. So he doesn't.
you're running 80-90% of your miles for business or more. So
yeah. I guess I still just question where that line is about the miles. I don't know. I feel a little weird with that one, that about writing that off. I don't know if I had a Tesla. I don't know. I guess I would have to look into this, and I'm sure he has. But
yeah, if I owned the Tesla, yeah, I may end up taking the actual value on or actual cost on the Tesla because of the value of the car, and the depreciation is going to be higher per mile than the 65 cents a mile would be my guess. I've not, totally run all the numbers. I know there's a lot less maintenance, but usually on a new car, there's not much maintenance anyway.
right.
But your depreciation and some of your other areas do end up bringing enough extra cost that you'd be surprised how much it actually offsets what you're saving in gas.
Absolutely.
But I'd run the numbers both ways. If I owned the car, if I leased the car, if I rented the car, if I were to guess, I would say I'd probably be more likely to just take the actual cost rather than the mileage amount on that.
Yeah. I think that's it for the questions. You guys, I think we covered a decent amount. Beyond that is where I would say, again, we're not experts, and it's, check in with an accountant. Any good accountant should give you at least a free phone consultation of some sorts. Don't be paying for things before you get some.
I want to look at this last comment that Gary said here, because I think this is a good one. Yeah, if you're smart, you turn your apps on before you leave the house, even if you don't plan to work, and that way you get the mileage. There's something to that, because even as a gig worker, it's possible to have commuting. If you're driving somewhere to start working, you can't write those miles off.
Right.
But if you've got the app turned on with the intent of taking orders, And maybe it's not very likely you're going to take the order, but if a unicorn comes along, you're going to grab it, right?
So if I want to drive to Oklahoma and see Gary,
Yep.
I can just turn the apps on.
Well, that's a little different. Now, if you're driving to Oklahoma to see Gary to talk, to work on plans for,
Oh, we have a
a gig
million ways that
conference
we
or
could
something like
make
that.
it legit. Yeah. I mean, but I'm just saying
You
that
could call
part
that a
alone
business trip,
seems,
and that's a
yeah.
different story. But so let's say I'm in Denver, right? And I live in West Denver, which is the DoorDash zone, but I'm scheduled out at gosh, what's the name of the zone up by Stapleton area?
Northfield.
Northfield, yeah. But let's say
Or
I'm scheduled in
Commerce City.
Northfield. I can't turn the DoorDash app on, with intent to accept orders until I get to Northfield area. So, I can't go available or something like that till I'm in that area. So I can't take those miles unless I jump on Uber Eats also and turn Uber Eats on.
He had said destination mode.
Oh, well, there's that. But yeah, if the app is on and you're intending to take orders, you're driving while you're going, there's a business purpose behind it. The miles you drive have to have a business purpose. And even if you're driving around looking for work, there's a business purpose. And that, to my understanding, is deductible. But if you're
I just need to
driving,
make sure people are getting their food on the way to Oklahoma.
but if you're driving somewhere before you turn the app on, that's a different story.
Right.
And so you drive across town before you turn the app on, those miles are now a commute, and they're
right.
not
So like
miles.
let's use those people who do rideshare and only do the airport. And I'm talking about they don't even wait for one to the airport. They get up in the morning and they drive to the airport lot.
Right.
That doesn't count.
That would not count because that's a commute. You're driving to where it's, it only counts if you're actually intending to make money along the way or something like that. And so like what Gary said about, if you're smart, you turn the apps on before you leave the house, because if you are, and you are willing to take orders, if they're really good orders along the way, now it's a business mile and stuff like that. So it's
because they're never going to be able to say, but you didn't take any, because we all know you can be like, well, there were 400, but they were all bad.
Yeah. Have you seen all the $2.50 DoorDash offers out there?
Yeah. I mean, it seems like something
$1.75 on Uber Eats,
Just be careful, guys. I mean, like when you start stepping up, this is what I call, riding that line. When you're riding, it's fine. You should.
I mean, honestly, be honest about when you're actually working, I mean, ultimately that's kind of what it's not that hard to know when you're actually working.
Right. I mean, and Gary's not being dishonest by giving the advice of turn the app on before you leave the house, because he probably just has his DUH and his Maximo app set to, hey, I only want anything above this amount. Absolutely. And he's not seeing it. So
I do the same thing. I mean, I'm like 90% of the time I'm active as soon as I'm going out the door. I'm usually heading towards middle of town because that's where it works best. But if something good comes along, I'm going to take it. And so, it's legitimate to say that I'm working and everything.
Yep. So, yeah, Gary, those were good points. Thank you for bringing those in.
Yeah.
And
really
Tony,
good.
I mean, I think that you've got this down. You and I talk. I know you're really into the Teslas. You understand how all this works, but I would absolutely ask somebody, because I'm a little stumped on that one. Or I mean, I don't even, not stumped. I'm a little uncomfortable with the answer right now. And I'm not saying you're wrong. I'm just, I think that one's worthy of asking somebody else.
So what are you thinking that it might be then? I mean, if you were to guess.
I just really, I don't know what about the miles. I mean, I'm not understanding. I guess I'm not even understanding what he's doing with them exactly. But if I don't know that he can claim those miles. That's just my thought.
I would, if you put a gun to my head, I would say you could not claim the miles.
Yeah.
But I'm not going to say that as an expert.
Right. Exactly. But honestly, like that's where I am too. I don't think you can, but
But the one part that
I'm not
makes
an
me
expert.
wonder is if you've had that same car for a year.
Well, like
You know,
Lisa's
and
car,
then,
they've only had a few months. They just added another one.
well, and I think that's another thing
So,
about a leasing with a car. When you lease a car, you take responsibility for the maintenance and all those things.
mhm,
If the person you're renting the car from is still taking responsibility for all that stuff, that may determine ownership right there, as far as who could, whether or not you could write that off. And that's another reason I would be inclined to say you probably couldn't take those miles. Now, the flip side is you're driving those miles, you know, you're driving those miles, and you wouldn't drive any differently if it were a different car. And so unless you're like claiming a crazy amount of miles that's going to raise a red flag, I don't know that it's going to trigger an audit. But that's
right.
up to you as far as how you treat that or whatever. I would still, I'm probably
But
too
see, that's
straight
I guess
laced or
that was
something.
what I meant by a
Yeah.
flag going off even more, because I need, like, if it's a little thing, like I was talking about music before, like, even though I know I shouldn't for food delivery, if I do that one, I feel like I'd be able to explain my case. They might be able to tell me, no, no, that doesn't work that way. Sorry, we got to put that back in. But I
So,
don't feel like they're going to come down on me real hard. This one, I feel like they would view as, you should have known this.
well, so like here's probably the best way to look at this when it comes to raising a flag. And I think it has to do with whether your patterns are different than other people in the same area. So, you know, you could easily drive 60,000 miles doing rideshare, right? Um,
More.
but,
Yeah.
you know, if an accountant puts 60,000 miles down on their tax return, that's going to raise a red flag because accountants don't usually drive 60,000 miles a year. And
Hmm.
that's the kind of thing that could say, okay, for an accountant, this is extremely unusual. For a rideshare driver, 60,000 miles and you made $60,000, that kind of fits within the patterns, right?
Yeah.
And so miles usually, now if you're writing off 200,000 miles and making $60,000, either you're padding the numbers or you're really dumb about the jobs you're taking, But
Right.
that could be the type of thing. So a lot of times it's like if you're way out of the ordinary. But so like one thing that comes to mind would be you get some people that say your meals that you take while you're delivering or while you're out on rideshare, that you
Hmm.
could write those off. The IRS is very clear about when you can take meals, and that's not one of those times. But it's a specific category on the Schedule C. So it's not like you could even bury that into another category, right?
Hmm.
So now if all of a sudden you have um you know $5,000 in lunches or whatever on meals, that's the kind of thing that can raise a red flag with that.
Oh, big time. Big, you can't
And
be writing off
so
meals.
you
And
know
if you
so
do, like I do a few times a year, guys, but there are big ones where I have other people and I'm
yeah,
no joke. We really are talking business or
the
something.
IRS is very clear that you have to have more than one person present, and it has to be to discuss or it has to have a business purpose for the
Right.
meeting.
But if
It
you met
can't
another
be.
rideshare driver at the diner every day, that's not gonna, I mean, even if you're like, hey, let's talk business for a minute, even though it qualifies, I would still
Right.
question, they would question it.
And again, that comes down to, it's one of those things where if you're having to do it, if you're just saying, okay, we're talking to, you know, I took this delivery the other day. Oh, there's my business talk. Okay, we can write that off. If you're making it up, is definitely not. But like we get together every once in a while for coffee or something like that, and we're
Hmm.
talking about what we might do for podcast things or some things that we might be coming up or something like that. So that's a very legitimate business discussion. But you got to have more than one person. So your
When we
meal in the
do
car
that,
doesn't
I
count.
think I could explain it, but I don't write it off because it's a lower amount, though. If we went out
Oh,
to
it's
dinner and had a
yeah,
big dinner, yes, now I know we
it's
talk enough
almost
business to
not
make
worth
it
the
worth
time
it.
to write off the
Yeah.
$3.
Right, but I mean, like, there's a good point in there from Josh that, right, I think he's referring to rideshare Lisa.
Mhm.
because I believe she writes off her meals,
Yeah. And
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 that's
and it's always possible nothing happens, but that is one of those types of things that it's outside of the ordinary.
mhm,
Like I said, the IRS just has those rules about when you can write it off. If it's just for you, you can't write it off, even if it's taken while you're working, because it's still considered a personal expense. And again, there's got to be a business purpose to it, and it can't be just that. Oh, well, I need to be fed so that I can do my delivery, so I don't faint. It
right.
just doesn't quite count.
Right, because they're responsible, you need to eat regardless.
Right.
I mean,
Right.
like, that
Exactly.
that answer would just be like, "Dude, you have to eat then regardless to not fall asleep."
And
And
the
all that,
same thing is
so,
true
mm,
of your clothes that you wear while you're delivering. You know, um, in fact, the IRS kind of, they say there that if the clothing is clothing that could be, considered normal streetwear, it's not a business expense. It's not a uniform. But if it's very specific to your work, I've got, I don't know, I don't think I ever tried to write it off, but like I've got my little shirt that's got my little logo on it. It says independent delivery professional. That's borderline, you know,
mhm.
um, because now you've got something that's specific. You go out and you buy a DoorDash shirt or a Grubhub shirt. I'm sorry for you if you decide you want to do that. I'm not going to advertise those companies like that, but they didn't pay me for that. But um, those types of things, um,
No, Josh, you can't do that.
you could possibly write those things off if they are very, very work specific and not something that you would normally wear in a day to day
Right, like
setting.
something that corrects your posture, that are
Yeah,
literally like Dardano's shoes or something uncomfortable as crap, and
sure.
yeah, I
Your
mean, like,
$500 sneakers would probably not count.
you can't have Air Jordans, and
You'd have a hard time getting that
you
one to pass.
can't do
But
that, yeah, it's but,
and so
well, I mean, he makes a good point here, though. I mean, deliver that, says khakis and jeans, or khakis and a collared shirt.
unfortunately, no, it would not, because again, those are clothes that
Actually, yeah, some
you could
businesses
pretty
make you
normally
pay for
wear
your
out there.
uniform anyway,
Now,
even a
if they said that you
W-2.
had to get a deliver that shirt,
Yeah.
um, then at that point, yes, that would be a business expense. But if they said that you had to get a deliver that shirt, they wouldn't last very long because they'd get sued for breaking the independent contractor
So wait,
standard or something like that.
before we shut this down then, what about hot bags? What about
Yeah, hot bags definitely.
all that
Um,
stuff?
yeah,
100%?
those things that you need to do your business well. Gary's apps.
Yeah.
Um,
Yeah. Oh, yeah.
that's another one. That's definitely a write off.
Yep. And that one you don't even need to have a conversation about, guys. That's
Right.
just you just can write it off because it's a tool.
Yeah. And so things like that. It's just if you, and it goes back to that. If is it ordinary and necessary? Is it something that has a business purpose and isn't extravagant or something like that? So
Right, yeah. I mean, like, I would even say headlamps, vests that are look like workers' vests so that you're not in the dark, you can be seen.
sure,
Even all
yeah,
those, that's fine.
safety
Just don't
equipment.
go overboard, dude. Don't say you have don't write off mag wheels because you're driving for Uber and you want your customers to be impressed.
I mean, there's a real easy way to say a lot of that stuff. That if you are looking for a reason to be able to write something off, it probably isn't a
You're
write off.
reaching, yeah.
Yeah. Um, but if it's something that you actually needed to go out and get, and my philosophy is, you should be tracking everything throughout the year, using Hurdler
I
or
mean, we
Stride
started
or
off by saying miles is
whatever.
the number one, and it
Yeah,
is. And you
absolutely.
if you're doing that, you're doing 100 things right. Now just correct the couple wrong. It's the miles you gotta get. You
Right.
gotta get them.
But here's, I guess, my advice as far as tracking expenses are. If you're not sure, track it. If you think there's any chance at all that it might be deductible, track it. Because you can
Mhm.
always ask your tax account, your tax professional, or you can always find out for sure. And there's nothing that's been hurt if you've tracked it, but then you find out you can't write it off. But if you come back at the end of the year and you find out, oh, I could have written that off, and now you can't find a record of it, or you can't find your receipts or any of that stuff. Now all of a sudden you might be out. So if in doubt, if there's any kind of question at all, keep track of it. And then you can always check with your tax professional, or, identify later on whether or not it actually is deductible.
Absolutely. So yeah,
Costco membership.
Yeah,
I think you could make a claim for that.
Especially because some of the jobs require cost. If you have ever taken one, yeah.
Sure.
I mean, there's some apps that send you Costco orders, so you don't get in without the card.
And I do have one. It was I think, let me Google it here. Tax deductions for Uber Eats. I can try and find it and put
and again,
yes,
guys,
and, under Google, if you do tax deductions for Uber Eats drivers, there's an article that's like 49 Uber Eats tax deductions and how to know. And it goes through a lot of the different things there. And I'll put a link
we post it in the
comments. Yeah. How do we do that? I guess I can just post it in the.
If you put it in the private chat, I can do it.
I just put it in the comments here.
Oh yeah.
And I'll put it there also. And what was the other one that I wanted to do? Oh, I don't think I thought about a Costco membership when I put that one down.
No, but I've gone through these of yours. He will absolutely have some you guys aren't thinking about.
Oh, the article isn't there anymore. There's one other that I'm looking for here real quick. And
it's not one of the two new ones, I take it.
No, this is the second one was just about the car payment. And so
there it is. Okay.
So those were a couple of them that came to mind. And you know what? It might have been under the Uber Eats one that I had the link to the one thing about the car washes.
What's up, Bud Soda? We're just wrapping it up here, but you should go back and team replay this. But also to everybody, again, I still got it posted right there. You can also just go to entrecourier.com. The top, I think the first two are the ones he just did on DD and UE. So those are written with, today in mind kind of thing. Like this is the here and now. But even his old ones make sense. Ron's older posts make sense. They're still they're not like dated to the point where it's not true anymore.
Well, and there's since 2017, not much has changed, other than the mileage amount. It's gone from like 52 to 62 or something like, or 65 now, or your
okay,
standard
this is the one
tax
you found
deduction.
for the.
Yeah, this last one that I just posted there is the one that was the article that I found where it was directions from the IRS about whether or not the car could be, or whether or not the car wash could be taken. And they were very specific on that one. And that's why I would be.
Seems like they should chill out a bit on the memberships, especially if they're in line, because a membership a month can cost what one car wash costs.
Sure.
At which point, like, let them have it, dude. Come on.
Well, and it's kind of like roadside.
There's an argument to be made that a clean car, period, represents everything better.
But AAA membership is another area where it's like, I think some people are hesitant to claim it, but it's not part of that normal day-to-day. So to my understanding, that is something that you can claim because you're doing it because you use your car for business. And so some things like that are kind of gray areas, but it's in the end, I think it's kind of like, if you're not trying to pull one over on the IRS, you're probably not going to get in trouble.
That's how I feel. That's why I was saying, if you feel like you can stand by it, I mean, if it's
Yeah.
not straight up outside the rules and like, dude, what are you doing?
Well,
If you feel like you can stand by your decision, and even if like you heard us giving our opinions, again, not CPAs, just opinions, and you think, well, no, dude, I could explain that.
yeah.
If you really feel like that, as long as it's not one of the biggest numbers like your miles,
Well,
I
and,
would
and
say,
here's
okay,
the
I
other part
mean,
of that too is, you know, you spend $120 a year on, or you spent $240 a year on your car member or your car wash, right? And first of all, you're not likely to get under um, you're not as likely to get audited.
right.
But if you do, what's going to happen if they look at that and they say, no, that doesn't really count, and you've explained it well,
That's what I'm saying. Like, if you
you
can
know,
still explain it well, then
they may, they might, understand that, okay, you're not trying to pull one over on them. They understand why you did it or something like that, but they might say, no, you can't claim that though. Well, you know what? You might end up having to pay taxes on that $240 now. And so you might have maybe $60 that you got to pay and maybe about $20 for interest and penalties or something like that. So worst case scenario for something like that is, you might have to pay off $80 or whatever. But I think it still goes back to, if you're absolutely using it for your business, and there's a business purpose to it, and you're not trying to just come up with a reason to do it, generally you're more likely to be able to do it. But if you're trying to kind of make it up, that's a different story.
and I think we all know in our gut when we're reaching.
Right. Yeah. And just like the rational driver said, the IRS isn't coming after you for 240.
Yeah.
Um,
But
and
enough 240s, and they're
yeah,
gonna look into it.
right. If all of a sudden you've got about, 20 of those puppies sitting up there, and
Mhm.
now you've written off, a few $1,000s in stuff that you're making up, and it's outside of the patterns. If it's unusual for delivery or rideshare, then it might be the type of thing that raises a flag. Generally, it's like the computer sees something that doesn't look right and it kicks it out to a report to the IRS agents, and it basically is just saying, "Hey, you might want to check out this return, see if it makes sense." And
You'd
so,
think the computer would actually literally blow up when it ran Ubers.
well, that's a different story
Like, I
altogether.
see some problems here.
Yeah, that's a different story altogether.
Um, but yeah, guys, if you just came in like Bud Soda did late, or Hi Cruise and Dasher, What's Up Rational Driver, all you guys that came in late, go back and watch this, because again, we're not CPAs, but we've done this a few years in a row, and I think there's good advice to be had in here. And leave questions. Check out Ron's site though, because he always updates them too. But like I said, there's older ones you can go back to too, and still get content out of. So yeah, he's got just the 2 new ones up right now, right?
I've
You
got a whole
eat
bunch of tax
right, but
articles, and so
Uber Eats and DoorDash have a specific, because there's a lot of delivery people here.
yeah, there are some that are written specifically about that, and basically they're the same article, but they're just kind of written with a little bit different tinge to,
Yeah, it's all
generally
double checking to make sure that
Uber Eats.
last year's
I've
is
got
still
one for
all.
DoorDash, and um, and then there's a general one that's under tax guide on the website. So,
Bud Soda, what would I say about this? I would say go back to the start of the video and watch it. It's literally like you just asked a question that refers to the whole thing we just did.
yeah, it's a hard one to say, because
Yeah, I mean, again, after
without
doing this
knowing the
conversation, it's like,
expenses
yeah, we
and
need to
other
know.
income and tax filing status, things like that, it's really hard to say. But if you made $80,000, you're killing it, and that's a
We
good
talked we
start.
talked everything you're putting, Bud Soda, we've talked about here. So I mean, and I'm just saying you should go back and watch this.
And I would
Because we
say my inclination with the YouTube channel is that you're probably going to want to file that as a different Schedule C. I do that with my website. And so, because it's a totally different business model, and so I file a Schedule C, and actually I don't even do Schedule C anymore because of the way my business is incorporated. But I do taxes on my website business, and then I do taxes on my delivery business, and they're two different things. And so and when you fill out your Schedule C, it asks you what kind of business it is. And on the let's say YouTube, generally you're going to want to do that as some kind of like a content publisher or something. And and I would say you want to keep that separate from your delivery stuff. And so stuff that's normal for a YouTube channel isn't going to raise red flags on your YouTube channel taxes, but could on a delivery type thing. And so that's the thing, is if you got two totally different types of businesses, you're going to want to file those individually. And then, it's still going to all end up going on your personal income tax in the end. But I would definitely keep those separate because they're less likely to raise flags one way or the other with that. Because if you put on your, it asks what type of business, and okay. Well, and you know what, so like my website, the first 2 years that I ran my website, so Bud Soda said, see, the thing is, I'm not monetized yet, but legally and related to the work I'm doing. And, my first couple of years on my website, I wasn't making any money on that. And, but I still ran the taxes and I still kept track of the expenses because, there's still a loss, and it comes off as a loss, but it's still.
That's what I was just going to say. Anything that, like, if he bought a microphone, man, and he does make content. If he bought a microphone, he could write it off as a loss.
Right.
Because,
and it would be a loss,
and especially because YouTube is still taking money on your channel.
Right. And so, but the one key about that is you want to be at a point where you're expecting you're going to make some money within a couple of years. Because generally the IRS is going to, after about 3 years of posting a loss on a business, that's when they're likely to say, this is not really a business. You should be making a profit by now. This is a hobby. And they may go back and disallow previous expenses.
I think he has enough of a growth rate on YouTube that he could compare it to other channels and say, look, I'm just trying to do what they're doing.
I mean, if
that would be enough.
Usually when you start getting into content with the idea that you're going to build a business out of it, then that you're going to start bringing in some money eventually. And so I think the rule of thumb is that by the third or fourth year, you want to have turned a profit. You want to have turned a profit at least once in 5 years, somewhere in that range, before the IRS starts to question whether or not it's a business or a hobby.
Maybe. I don't know. It seems, I mean, you can, but you better have a lot of good records if you're claiming 5,000 startup for YouTube.
Yeah. I don't know. And I know for me, a lot of mine was, hosting costs and the podcast hosting. And
because I have all the same expenses you do, and I just don't think I could get anywhere even close to that.
Right. It was,
and again, go back to my gut and be able to explain what I'm doing either.
Unfortunately,
like why I need to write it off.
You could do the home office deduction for a content business, but I couldn't do it those first couple of years because I wasn't making a profit on it. You have to actually make a profit to be able to take that deduction. But, and that's one that for delivery or rideshare, generally you can't, because first you've got to have a space that's dedicated, that's only used for your business. And second, you've got to be using it regularly and consistently for your business. And, taking 5 minutes to keep track of your records on DoorDash doesn't quite fit that. But anyway.
Yeah. I mean, I see that he put, I spent $2,500 between sponsoring that race that he was talking about. and going to the gig conference. I don't think you can, that's not an amount you can totally work with.
It might be,
Maybe all of it,
it might
really?
be. If
But again, that might, again, just
if
me,
it's about
that's
building your
flagging me to
business,
just call an accountant. Just call.
sure, absolutely. I would definitely get that clarified. Um, Generally, I think you're pretty safe with some of those things. I mean, now if you're talking about $100,000 losses, that's the kind of thing that could get some
You're welcome.
that's the kind of thing that would get their attention pretty quickly.
Yeah,
But
we went through this. I take home office too every year. So
mhm.
that's not, I saw that you had put that something about misinformed, but I'm not sure what you're talking about because we said that you can take home office.
Well, for delivery rideshare, generally no.
Oh no, but we were saying for us, like we have an
Yeah,
actual reason that, like if you have
yeah,
a YouTube channel and you make a video, you have an office, you
sure.
can
And in that
explain this.
situation, you definitely can, as long um, as long as you're making money with that business. It can't be taken as a loss, as in, your total income was $50,000 and your home office deduction was $2,000, and you didn't make any money with that business.
But so
Then it
how'd you
won't.
spend $2,000 going to the gig conference? That's a red flag to me, man. I spent nothing near that. Yeah, I mean, even Middleton, but so to how? I mean, yeah, come on, man. I mean, I see Rational Driver. I get what you're saying, but I think we're trying to be a little away from the line because if you have questions, ask an accountant. Because I'll admittedly, I've had my years of pushing the limit where I found myself going, "Is this? I'm just going to do it," and it's
Well, and I'll find and post in the comments and when I get a chance. I don't want to take the time to look for it right now, but like for
yeah,
the home
yeah.
office, I know the IRS is very specific about that, and
Yeah, and
so
Rational Driver, like,
I'll find the language
Marissa
for it.
Marissa, my fiance, and Ron has done pieces with her. She's even said she talks about this too, about there are some parameters, and she's a tax accountant, so she knows more than all of us. So, um, no, he's a tax strategist. Well, yeah, I don't know. She's a tax accountant. I don't know what the difference is. I mean, I do, but somewhat. But um, again, I don't know that we're on the same page of what we're talking about either. What I'm thinking you're saying, I don't know that we're disagreeing on because, yeah, I mean, I take mine off too.
Yeah, and maybe that's the question. Where are you saying, I guess, that you can take it? Are you talking about as a driver, or are you talking about, um, as like a YouTuber or something like that?
Yeah, I mean, I was trying to go back through. I didn't even see what this was in reference to. Right? Yeah, that's what I got. I knew that. So
Okay. Well, as a driver, here are the rules for whether or not you can take a home office deduction. First of all, it has to be for space that is exclusively for your business. If you're using it for personal purposes at all, um, if you're using it for personal purposes at all, it does not count. So it's got to be exclusive for that. The second thing is it's got to be used regularly and consistently for your business. And so, something that's just taking a few minutes to do some records here and there or something is not going to fit that description. Now, if you meet that description, if there's some way that you're doing an awful lot of desk work or something, then, if you're doing an awful lot of desk work or something like that, and you've got a space that's the only thing you do is that desk work for your business, then you can do it. So I'm not saying you could never do it as a driver, and I apologize if that's how it sounded, but for the vast majority of delivery workers or rideshare workers, it just doesn't fit. So,
Right. I mean,
you know,
even for me, it's not my gig work, even though I'm doing my desk work about gig work, it's about my brand. And
right.
therefore I can use the office because I need it for my brand.
Yeah. You know, so that's the thing is it comes down to what the IRS says about what you can claim. And they've got two very clear rules about that. And okay, so the question is that the only thing you do in that room? You know, you said you've got an entire room with a desk where you do all of your bookkeeping, which is cool. And if that's the only thing you do in that room,
He says yes.
and you know, if you're doing
Just
a
be, again,
substantial amount of
though,
work in it,
just be
then
prepared to explain it, man.
yeah,
That's again, I go back to that because they might, if they looked, they might go,
right,
really?
yeah,
I'm just asking. I don't know this. I've never seen your room. I don't know.
yeah, and you know, I mean, ultimately the question is, would it stand up in an audit? And yeah, but again,
And do
it
you
also
have a
comes
couple
back to
other
an
little
audit is not
flags?
very likely,
Right. But do
So
you have a couple other little things that they already found and now this? Because they
right.
start adding up. If your audits, if it's one thing, or is it 8 things and they keep finding little things? Because then they start to get a little pissy,
Yeah. And I've heard them, being very specific in some of their questioning and things like that about, well, do you ever do this? Do you ever do this? Do you ever do this here? And stuff like that. And
So
so,
he said, here's the string of it. I'm maxing out the square footage. It's a trick. The IRS lets you take 5 per square foot. Wait, up to 1,500. Yeah, that's what concerns me.
so, again, it's a matter of whether or not you fit the definitions. I mean, if you're absolutely doing consistent and regular work in there, and that's the only thing you're doing in there, then you could write that area off. But most gig workers can't say that.
Right. I also, and again, I might be totally off here. So just understand this is my view, but everybody has to have bookkeeping of some sorts, or they should be.
Sure.
So like, does the IRS look at that as like, dude, you're a driver and I don't see a real reason you need an entire room for bookkeeping?
Yep.
I mean, everybody has to do this. You can't, you got to fit one of the other criterias for the room.
I think what Gary said, just said, he said, my last audit went well. The IRS had a few questions and just wanted to make sure it was something that the business required. And that's really what it comes down to. And it kind of goes back to what we were saying earlier, that it's like, if it's legitimately something that you need for your business and there's, a business purpose to it, generally they're going to understand that. And they're not going to at least think you're trying to pull one over on them. But I think you also know when you're trying to pull one over on them. And so it's kind of like
I believe
if you're
that
just
too.
trying to make an excuse for writing something off, more than likely it's not likely deductible, and more than likely the auditors would be able to see through it. You're probably not going to get audited. Chances are you won't,
but knock
unless
wood, because as soon as you say
exactly
it, you could be. I mean,
exactly. So in the end, it's just, it's kind of a question. It's if you're trying to make it a trick to be able to write off a little bit more than is normal, whether or not that's the case or not.
Yeah.
So
See, that's one thing I thought too. When I saw the word "it's a trick," even I think he meant it's a trick within the law. But again, down here he says the law is vague. So those two put together, I think that trick becomes a trick.
right.
And that's the kind of thing that, where me personally, I'd go, no, if I'm doing it like that, I don't think I could explain this.
Right.
And make sense of it.
So anyway.
But yeah, guys, thank you for joining us. Yeah, I mean, there's tons to go through, but like Bud Soda, you came in late, watch this, rewatch it, leave some comments, leave some questions. go check out Ron's site too, you guys. There's a lot. His articles, just right now, especially if you're doing tax stuff, because he's got some up there specifically to DoorDash and some of this other stuff. So yeah, and Rational Driver, especially, like if you're writing an article, go read some of Ron's first. I mean, just for perspective, because he's been doing this for a while. He writes some good articles always, but on this stuff especially too. So,
well, Bud, we've been going for 2.5 hours now.
yeah. Yeah. So you guys, we are out of here, but I really thank you, Ron, for joining us. Check out
Yep.
his website. I don't think he does a lot on YouTube, but go subscribe to his YouTube channel anyway. I think he always tells me it's not a big deal, but go do it anyway. You never know that he might decide to, Right. But I mean, it's more about his website and Twitter. That's where Ron is.
Right.
I mean, he's on other stuff too, but those two, you're always going to see action. You're going to see stuff on his website, and you're going to see he's very active on Twitter too. So, but yeah, you guys do your taxes right. If it's questionable, you call an accountant. And if you know you're crossing the line, then just don't cross it. Because that might not even be worth the call to the accountant. Because again, there's a feeling inside me. I know when something's not right. And I feel like that's exactly what the IRS would be looking for. That same feeling. This isn't right.
In the end, it's up to you. It is how you decide to kind of handle some of these, especially the gray areas, is really up to you. And I know a lot of people that kind of feel taxation is theft, and I'm not sure I can argue that to a whole lot. But ultimately, it's just it's kind of a decision you got to make as far as how you approach those different things. And I'm not going to tell you that you're wrong for doing it differently than I would. And
yes, I mean, yeah, it's in the end, it's up to all of us to do it. But if you get into post a question here if you got them, guys. We all know. I know everybody in the chat today, so we all know this one thing for sure. Many channels, I've said this a couple times before we roll out, I will say this one last time. Many channels straight up put out disinformation that you should not be listening to at all. And again, I'm not referencing anybody, so there's no even reason to ask me. I'm referencing most people that talk about this because they're just like, publications putting out stuff on this. People are looking to do it on YouTube right now, and a lot of them don't have a clue what they're talking about. I read some things that I'm just blown away, where I'm like, that's not right. That's not right. That's not right. And yet people believe this stuff. And so why should I believe you guys if you're asking me that? Well, I think because from the get-go, we said we're not CPAs. We're just giving you advice that we've learned over the years. And I would stand by everything we said here today. So, and any time we question something, we said that. Call an accountant, or that's out of our pay grade. But yeah, Ron, thank you very much, and everybody, thank you very much, and we will see you. What day is it? We will see you here on Thursday, I guess. Next. Have a good one, you guys. Take care and be good to each other.